For centuries, Welsh farmers have been perfecting the balance between maintaining the spectacular landscapes of Wales while producing delicious lamb and beef. Lucky for us, we have everything we need from the elements: grass, rainwater, and a whole lot of pride. Sustainability is key as we continue to work in harmony with our surroundings to bring you a plate that's uniquely Welsh. It's in the taste. Learn more at eatwelshlamandwelshbeef.com.
Growth in terms of the size of the economy.
Oh, okay, sorry, okay.
But of those, the U.S. is the only one that probably doesn't have as many question marks over growth around it as much right now. And to your point, it's what the dollar is trading against. So if you look at the dollar on a trade-weighted basis, it's still rising, but to a far lesser extent, simply because the weight of Mexico plays a bigger role, the weight of Canada plays a bigger role. And those economies that are so strongly tied to the U.S., their currencies are not performing well, but they're not performing as badly as the euro or the yen.
So then do we need to do the second derivative and look at the crosses for the various currencies to figure out what the relative advantage is? Because, again, taking it to the euro Japan, the euro is actually doing better against the Japanese yen, which I guess, again, reminds us that the market is losing faith in that stronger yen story.
Yes, there's a few different elements of that. So first, yes, I think this is another year where relative value in FX makes a lot of sense. That was the case last year. I suspect it will continue to be the case this year. And you don't even have to think about the dollar. You can think about stronger EM currencies that offer you fiscal sustainability and decent external balances and yield, like Russia, versus those that have the opposite case, like South Africa. But then getting back to the story of the euro and how that relates to the yen, I suspect it's going to be a little bit more nuanced than that. But thinking about the yen specifically, yes, things have changed in so much as it is no longer as big of an exporter of capital to the world through its current account surpluses. But also the investment environment has changed with the rules around what is considered domestic versus foreign investments in Japan. And I suspect a lot of the flows you're seeing over the last week or so have a lot to do with that. Flows going out of Japan on an unhedged basis that contribute to this yen weakness as part of this broader change in the portfolio structure.
Is it possible the concept of safe havens and risk assets has changed? Because we've questioned whether the Japanese yen is even a safe haven anymore. Same too with risk currencies. I mean, we used to talk about the Kiwi and the Australian dollar. If you want a bit of risk, you go there. Now you go to technology.
I think that it's easier to say the relationships have broken down on the risky currency side, where even though the yen has been very, very weak in an environment where gold has performed well, the dollar has performed well, the correlations to global equities are still pretty strong. And they're as strong as they are for the dollar and the Swiss franc, for that matter. In fact, they're stronger. So I'm not ready to dismiss it yet. Japan still does export a lot of capital abroad. It's just not at the margin as big as it once was. But that relationship is still pretty powerful.
Yeah, and I think that change at the margin is down to the compression of the different levels of interest rates we see, right? The safe haven characteristics of the yen, where it used to go up when things went bad, was because it had gone down when things were good, because people used it as a carry trade. You borrowed in yen and you invested in other currencies with high interest rates. Well, there are not actually that many currencies out there with very high interest rates anymore. And so the first part of that people take yen and invest it elsewhere, is the strong that strength is less just on a pure carry basis, not the long run investment flows you're talking about. And so it's good that's why you're seeing maybe less of a powerful safe haven performance out of the yen.
And also, I mean, global equities, U.S. equities, are still near all-time highs. So it's not as though we're in a complete safe haven environment. It's just there are some more idiosyncratic factors that are at play.
Tim, you're going to stay with us, so we'll come back and we'll talk some more about the emerging story with you, because I think that there could be some interesting opportunities, I think, based on what you've said in your notes. And David's going to stay with us, and we'll pick up the conversation with David shortly. Karen.
I'm going to take you to a couple of more stocks that we're watching, and we saw a weak print for telecoms today, and one of the stocks are moving in the basket, Deutsche Telekom. T-Mobile and Sprint have renegotiated the terms of their merger, leaving major Sprint shareholder SoftBank with a 24% stake in the combined company. That is down from 27%, while T-Mobile's parent firm Deutsche Telekom will take a 43% stake in the new entity. SoftBank agreed to the change in a bid to avoid a delay in closing the deal, according to Reuters. And to Pearson, the early reaction in the stock to the numbers today is weaker, down 1%. Its full-year earnings fell to the bottom of the guidance range following several years of profit warnings. Outgoing CFO Coram Williams emphasised that the earnings also marked the first time in 5 years that the British education publisher has stabilised sales. Williams says he believes the company's restructuring will lead to growth in the near future.
We have really driven the digitisation of the higher education business. And actually all the pressures that we've seen have been in the legacy textbook business. 10 years ago, we sold 21 million textbooks. It'll be fewer than 3 million this year. We're towards the bottom of the valley on the physical side, and the digital business has got a suite of new products coming. That's the first point. Second point, if you look at the rest of Pearson, a number of years ago, it wasn't performing the way that it should have been. It's now driving sales growth of 4%, and it's delivering consistent, sustainable profits. And then the third thing is we've really simplified the company. Back office is a lot simpler. The portfolio is a lot simpler. So when you put it together, Pearson is positioned to grow.
We found some green on the market. Valeo, it expects to outperform in a tough auto market in 2020, helped by strict cost controls. The automotive supplier said its plants located outside Hubei province in China have resumed production. Well, speaking to CNBC earlier, the CEO, Jacques Aschenbroich, said it was too early to tell the impact of coronavirus on this year's results.
We take care of the health and safety of our people, which is our first priority. On the second side, our team did a fantastic job to reopen 32 out of 34 plants we have in China, which is a good achievement. Now we have to make sure that the supply chain is improving, and we see it improving. We monitor every day what our suppliers are doing, both for our Chinese operation and for our abroad operation. So we don't know exactly that to China for the time being, the Hubei province and outside Hubei. Outside Hubei, things are improving extremely fast, and I hope that will normalize soon in the next few weeks. Hubei, we have to monitor, and we don't know yet when we'll be able to open our plants and when our own suppliers will be able to open their operation in the Hubei province.
So we're just hanging out here for the first of the series of PMI data that we will get here. This is a February flash number, and of course we are combing these figures to get a good sense of what impact directly there will have been from coronavirus. So let's read you the numbers. A bit of bingo calling. It's a career I always fancied but never quite had the voice for. Services PMI to 52.6 points in February, the final 51 for January. The forecast was 51.3. The manufacturing PMI fell to 49.7, which is obviously below 50. 50 is key because anything 50 and above represents expansion. So this is a contraction in terms of the flash February manufacturing PMI. January final 51.1, which was better than the forecast 50.7. And the flash composite PMI, still above 50. We are 51.9 in February. The January final 51.1, the forecast 51. Not a disaster, I would say. In fact, if anything, perhaps the services PMI doing a reasonable job here of holding up the overall blended number. But clearly manufacturing still continues to be an area of weakness.
Yes, it is.
All right, okay. All right. Well, I didn't know if anybody wanted to pick it up.
At least the bottoming of the manufacturing cycle, which was apparent in the fourth quarter, is now going to be significantly elongated because of what's going on in China, and parts of Europe will feel it.
Okay. Apparently what you should have said is Danny Leroux 52, and the previous figure was tweak of the thumb 51. Danny Leroux being French, of course. Coming up on the show, you don't know who Danny Leroux is before your time, isn't it? He was an entertainer in the 60s and 70s. Very good. Coming up on the show, China gives an update on how the coronavirus outbreak is affecting economic growth and trade.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under the Your New Episode section. Happy listening.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow and tune in on Facebook, Twitter, and Instagram to get the most out of Tune In.
And determine the right level of care, whether that's just a helping hand or full-time memory care. Best of all, it's a free service. Call today. A Place for Mom. You know your family, we know senior living. Together, we'll make the right choice.
Call A Place for Mom right now to get our free ebook on financing senior care, as well as a free referral for senior living communities in your area. Call 1-800-536-7580. That's 1-800-536-7580.
We are the dreamers.
We changed the world.
Because we don't give up.
IU can help you live your dream.
IU is an online college, so your campus is wherever you want it to be.
Take classes when you want to take classes.
You receive the tools you need at no extra cost.
Even a brand new laptop and tablet to use in school.
Call IU, then tell them your dream.
1-800-967-0542. 1-800-967-0542.
The landscape in terms of media, distribution, creation of content is always changing, but it's changing even more quickly now. I've been covering this industry for over 2 decades. When we come to a meeting like this and get an opportunity to talk to John Malone, we get some answers to some of the important questions investors have.
I think what you're going to see is a continuation of the consolidation of wireless and wired networks.
We're able to give people access to key players that no one else is.
The great thing about Fast Money is you're getting multiple perspectives.
My specialty is watching U.S. equities.
I am a long-term investor for sure.
I've always looked at technicals more than fundamentals.
I don't just look at one entity. I look for unusual options.
I detest stock market manias.
I'm a global trader. I bring the global perspective.
Our investors want to make their own decisions.
We deliver dozens and dozens of trades. That's what we do.
Fast Money, weekdays 5 Eastern on CNBC.
You're watching Squawk Box, and more selling in the airline space today. We saw it yesterday with Air France KLM warning around coronavirus and taking rival Lufthansa south, but the red ink persists. The National Health Commission in China confirmed nearly 900 new cases of coronavirus infections on Thursday. There was a sharp increase from the day earlier. The figures include more than 200 people testing positive in 2 prisons in Hubei, the outbreak's epicenter. Now, South Korea today has designated 2 major cities as special care zones after confirming 52 new cases. The country's national tally tops 150, most of the 4 largest cities. I'm going to take you on to what we're seeing out of Renault, and in the auto space, shares are lower after alliance partner Nissan said it will delay production in some of its Chinese factories due to coronavirus. The Japanese automaker has 2 plants in Hubei province, the center of that virus outbreak. Steve.
Excellent, thank you very much. Let's get back to David and Tim. David, the question on bad days is, why isn't anyone selling? Where are the sellers? And it's something you've picked up in your asset thoughts as well. And I'll just quote from this and you can expand upon it. Anecdotally, our clients are largely constructive, but no one is running huge positions in risk trades. This would help to explain the lack of forced selling seen so far. No one to sell, no one wants to get out at all.
Well, last year, the product flows that we saw was heavy inflows into money markets, into fixed income. That was starting to reverse, but not completely. And now when you have the emergence of this virus threat, you have seen some movement back into cash. But the broader point is, particularly retail and real money investors looking at things like the ICI flow of funds data, we're not really invested in equities. And so therefore, when you get a shock like this, the selling you see is probably speculative.
Excuse my ignorance, well, isn't everyone invested in equities through their 401ks or their pension funds or their mutual funds? We're all there, aren't we?
They are. These are the passive managers, but we're thinking more about the active inflows that are going into these funds, and it just doesn't seem as though there has been this broad movement into risk. And speaking again anecdotally, as per my notes, the clients we speak to they're there, but they all have this nagging fear in the back of their head of something like this. And so, are they as invested as they could be? No, they're certainly not when it comes to an off-benchmark position.
Yeah, I completely agree that a lot of retail money has not been in this rally in the last couple of years because of the fourth quarter of 2018. And if you actually look at some of the major players in wealth management, there was a slew of announcements about going underweight last summer. Even if you're overweight equities, as we are in our core strategies, we're less overweight than we were a couple of years ago because you think you have to respect the length of the cycle. It's been long, and respect where yield curves have been. Respect the possibility that the Fed was undergoing a policy mistake when it was tightening so much in 18. But still, so even the positive even the investors that are very constructive about where we're going, I don't think it's more difficult to really push the boat out in terms of positioning relative to your benchmark because it's not 2013 and there's still lots of unemployment, a very steep yield curve, the kind of clear mid cycle signs that there's a long way to run. To be very clear, I do think this economic cycle can run for a number of other years because if you look under the surface, certainly in the US and almost every major economy, you don't see the very significant imbalances that are usually revealed to cause a recession. If you look at, for example, the percentage of GDP going to durable goods, business investment, housing starts, this kind of stuff, it's not at the cyclical peaks we've seen. So financial variables say late cycle. A lot of the economic variables can say, you could argue a mid-cycle, even though you've got very low unemployment, participation still has a rate to rise. But even all that, you put it all together, even if you're positive, it's hard to say buy a lot of equity on leverage. It's hard to really get away from your benchmark, and therefore potentially that's why maybe you don't see a lot of that selling at the moment. But at the moment, we look at the macro situation with what's going on in China and think it's contained. If there's another shoe to drop here, then maybe you will see a bigger reaction, and things like volatility indices and options pricing will start to affect that a bit more than they do right now.
Can I just focus you laser-like on the UK for a minute and just step away from the big macro? You've got a position where you think the pound actually has run its race, and it could be lower from here, which runs against a lot of the institutional thinking, which thinks the pound goes up from here across the year. There is a Boris bump. We had an interesting retail sales number yesterday, which looked quite encouraging for the UK economy. Why so negative on the outlook for sterling?
There's a few reasons. First of all, the valuation case that drove a lot of the longer-term money, I think, into sterling following the referendum, and here I'm thinking particularly about central bank and sovereign money, seeing a value play. That's gone when you consider on things like a PPP framework, which admittedly takes a long time to adjust. But that is basically gone against the dollar, and actually our measures have it strong, expensive versus the euro. So that's one factor. The second is it is a consensus trade, and we kind of follow the consensus on a lot of things, but this is one where we're happy to challenge it a little bit because it is such a crowded view set to see this extending. And thirdly, the Boris bounce, or the removal of uncertainty, I'm not quite certain is long-lasting when it comes to how the negotiations have opened. We know you're going to start off miles apart and come to some middle ground, but that middle ground, it's quite clear the desired end state, at least on the part of the UK, is quite a lot of divergence, which is, first of all, going to be bad for what little of the manufacturing and industrial sector remains, but also for the more important service sector, it's going to be very, very difficult, we see.
We have to leave it there, I'm afraid. I've really enjoyed the conversation, but thank you very much indeed for your time today, sir. Very good to see you. Tim Graff, who is the head of macro strategy EMEA over at State Street. David Stobbs gets to stay with us. Just to say, coming up on the show, Sunday's state elections in Hamburg don't come at a great time for the CDU as it continues to search for its next leader and successor to Angela Merkel. We will discuss next.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under the Your New Episode section. Happy listening.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
and a free gift card to any guy who texts ACE to 234-234. Bosley will show you for free how great your hair could look. Using the latest technology, Bosley's solution to hair loss is permanent and protected by the Bosley Guarantee. Plus, since Bosley has new non-surgical options, you owe it to yourself to text now for an absolutely free information kit and a gift card for $250 off. No matter what level of hair loss you have, text ACE to 234-234. That's ACE to 234-234.
We've all got something in our closet we can sell. Jeans you don't love? Sneakers not your style anymore? Jacket that's just not your color? Well, on Poshmark, you can put them up for sale in seconds. Just take a photo, set your price, and turn your closet into cash. Download the free Poshmark app today.
Now get greedy whenever you want. Subscribe to the American Greed Podcast and take your greed to go.
Crime absolutely pays, and it pays a lot.
Some people will do anything for money.
The American spirit, inherently competitive, always driven with a hunger, ambition, and an appetite to succeed. The pursuit of prosperity can be unpredictable and thrilling. From breakthroughs to breakdowns, the launches and the crashes. Perseverance is paramount. Knowledge essential.
Good morning, everybody. Welcome to Squawk Box here on CNBC.
That's what drives us. It's in our DNA to provide the information you need wherever you are to propel your dreams forward.
It's a red day, as you can see. European stocks following Asian equities into the red amid coronavirus fears, despite Beijing insisting key manufacturing provinces are quickly getting back to work. Shares in Renault slumping to the bottom of the CAC after its alliance partner Nissan says it will delay the reopening of some plants in China. UniCredit shares see red as the CEO, Jean-Pierre Mustier, is named as a frontrunner for the top job at HSBC, pitching him against the current interim chief, Noel Quinn. And EU leaders pull an all-nighter, but make slow progress in talks to hash out the details of the bloc's next budget. Commission President Ursula von der Leyen tells CNBC it's important to fund climate and digital policies.
This is the reason why we're negotiating. There are many different interests that have to be convened with this budget. But good is that, as I said, it puts emphasis on the modern policies.
Flash Services PMI was 53.3 versus 54.2 in January. The composite PMI over in Germany, 51.1 as opposed to 51.2 in January. Manufacturing PMI, look, it's moving in the right direction, 47.8 as opposed to 45.3 in January. But Annette Weisbach, who joins us now out of Frankfurt, the manufacturing figure, the good news is it is percentage points higher than previously. The bad news is that it's still solidly in contraction.
Yeah, and actually, I think this will not change very soon, because if we talk about Germany, the industrial recession is a clear risk to the country and the business model of the country. We don't see a substantial uptick in that momentum, and that is, of course, currently also because the coronavirus is bringing a lot of that production to a standstill in some regions of the world, and that, of course, has a material effect on the German economy. I guess the whole topic of where the industry is headed will be pivotal for the success of Germany, not only this year, but also for next year. I think it's quite interesting that we don't see really a slump in the PMI data here, despite the fact we have seen a severe drop in the ZEW just days ago, and because of the coronavirus. So we're going to see, I guess this kind of tells us also a story that markets or investors do fear about the coronavirus impact more than the real economy, which is of course mirrored by the PMI data, because this data is giving us a picture of what real CEOs do think about the trajectory for the economy. So in a nutshell, it's weak data for the industry, but as you were saying, there's an uptick momentum, but I think it's far too early to actually declare victory when it comes to the economic outlook for Germany and especially for the industry. With that, back to you.
Annette, thank you for that. Let's just have a look at the politics for a moment here in Germany. Hamburg heads to the polls this weekend. It's the first regional vote since the chaotic state election in Thuringia earlier this month. The Social Democrats are expected to win, but not without losing a significant portion of votes to the Greens. Angela Merkel's CDU is polling at all-time lows in the northern German state as the party searches for her successor. Annette joins us with more. Annette, of course, will be very aware of this shooting that took place just outside Frankfurt in the last few days. I wondered, firstly, do you think that will have any bearing on how the AfD may poll? And secondly, maybe we could talk about the runners and riders potentially to replace Angela Merkel.
Actually, I think it's kind of interesting to see, ever since that mishap in Thuringia, the federal state in eastern Germany, the AfD is actually losing some sort of momentum. And those attacks in Hanau, which is actually, as you were saying, very close to Frankfurt, are also not boding well for their popularity, because there is a clear understanding also in German society that this should not be tolerated. Achim Laschet, one of the potential contenders for the chairmanship of the CDU, yesterday in a widely recognized talk show was saying that the risks to the society are clearly located on the right-wing side, which is a very strong sort of positioning of that politician, because for many years I think the perception was that left-wing terror in Germany is a problem, but now we're clearly looking at the right-wing scene since many years, and that is not playing into the hands of the AfD. Talking about this election in Hamburg, this record low popularity for the CDU might actually pose a severe problem for the party itself. Normally, traditionally, Hamburg is a stronghold of the Social Democrats. The CDU never actually really won a vote there, but still they're falling in the popularity even there to record lows is not something positive for Angela Merkel. And we have quite some contenders now who want to be the chairman of the CDU. And the key question is whether this is actually going to happen with Angela Merkel as chancellor. Her rule always was that the chancellor should also be the chairman of the CDU and vice versa, because we can't have two dominant politicians on the political scene in Germany. And with AKK, she actually departed from that rule she had for herself, and she failed. And that's the general understanding in Germany, and that is why we have that debate currently, whether it's actually possible to have a chairman of the CDU who is not the chancellor and be successful in that. And I guess the opinion moves towards the fact that this is actually not possible, and the question is whether Angela Merkel has to resign early to make room for someone new who then could actually be the new chancellor. But here's a but. It's kind of a catch-21 situation in German politics. The SPD already said we don't stick to a grand coalition without Angela Merkel. With that, back to you.
Very much for running us through the politics. And while you've been talking, that data out of Germany, the PMI, is just calming some nerves out there. We were travelling south by almost 0.5% on the core markets, now flat and only slightly flat on the German market, only slightly weaker on both the UK and France. So that's trimmed some of the red ink that we've been seeing on these boards from the start of this session. We are now on the benchmark south by about 0.25%. I want to take you to a couple of sectors and you can see how that translates. There's been deep red ink parts of this market this morning. Basic resources was down more than 1%, for instance. Oil and gas from the outset weaker, and autos has been one of the weaker components, but now you can see switching into the green, bouncing by about 0.1%. Real estate also now marching into positive territory, so that's been quite a swing from every sector in the red at the start. Let's take a look at some of the individual stocks. A bit of M&A moving around on some of these big names. Sopra, for instance, on the back of some deal making, moving up by about 3.6%. Hammerson selling some out of the city. Percent higher for that stock. You can see gold exposures getting a bounce after we've had that 7-year high on the precious metal. Polymetal stock up 2%. But still, weakness persists in the airline space, and we saw it yesterday from Air France KLM trying to tally up the cost of coronavirus, and that stock again taking another hit, down 2.8%. Jeff.
Thanks very much, Karen. David Stubbs is with us as our guest host this morning. David, a great question from Linda, one of our regular viewers, who says CapEx is almost non-existent. Hence, technology is wrongly priced. How should we build a portfolio around technology in the near term? This is an interesting point.
Sure, and I think it's totally wrong. If you look at the CapEx numbers, especially in the US, but also it's visible in Europe, overall CapEx has absolutely been weak, right? And it's gone through big swings in the last 10 years, usually around the movements in energy, right? When energy was high, people invested a lot, then it crashed. We know the problems in high yield around that. If you actually strip out those kind of maybe legacy or energy sectors, and you focus on the components of CapEx, which are focused on the new economy, software, specific IT things, is actually very strong, compounding at high single digits very consistently no matter what the environment. And that is, I think, one of the key trends that is going to happen throughout this decade is a digital transformation trend, where you have companies in the regular parts of the economy, as it were, normal ones, from banks to every other type of business, who have to make very large investments in software. Why? Because they've got a lot of data. When you have big data, you've got to store it, analyze it, and got to keep it safe. And that means you need cloud storage, you need AI, and you need safe cybersecurity capabilities. And if you don't do it, your competitor's going to do it, you're going to fall behind, and your customers expect a service you can only provide to them if you have a way to analyze their data and give bespoke services, and they certainly expect you to keep their data safe. And so that is powering this big build-out in CapEx amongst major corporations. JP Morgan's one of them, but it's not just about banks. Really, this is about tech coming into the body of the economy, and I think it's going to drive a rebound in productivity throughout the 2020s.
Is there a sense in which people then have been thinking about technology in the wrong way? Because as you have the conversation with strategists about allocating to different asset classes and sectors, technology growth has been perceived almost as a defensive, because you can't get gain from buying value, because the perception is that broader economic weakness in the global economy will be with us for some time to come here.
Sure, there's a lot in that question. Certainly, it's always dangerous to talk of something like technology as defensive, but we would use the word secular growth, where if big companies around, or big and small companies across the entire economy, have to make these investments over the next decade, whether there's a recession or not, the earnings of the companies selling them the stuff is going to be very consistent. And that's why I think you've got secular growth in earnings, which is why it behaves in a reasonably defensive manner. I think the underperformance of value is about something else, which is obviously, firstly, very low bond yields, but also the big question marks and weaknesses in some major parts of the economy. Obviously, you've got at the moment, financial screen cheap. We know that low interest rates, tight credit spreads, flat curves, not good for their kind of basic earnings. We see a lot of adjustment and reform coming in banks. We've got all the announcements in the last few days on those. And then, of course, energy. We've discussed the trend towards sustainability. We see the big dividend yields in some of the energy providers. Maybe a trend to disinvest potentially as well. Can you really buy those for a 10-year hold? All those are big parts of value right now. So you see that being questioned as well. So a number of things going on driving a sector thing, and that's why when you go pure growth and value, I think you lose some of the colour for what's actually driving the underlying stocks.
I was going to ask you more directly about the FANGs, because this week we've seen a fairly significant moves. The longest daily winning streak since August 2018. For the week, FANGs are up about 0.9%, while coronavirus fears have persisted across other asset classes in the market. Apple even had a warning, even warned about the impact on supply and demand in its business this week, yet it has not touched the sides. Do you think there is too much euphoria?
I think that there's a concentration risk in most portfolios I see around these names because everyone loves them. They've done tremendously well. If you haven't rebalanced, then you're running probably more risk in a concentrated number of stocks than you think you are. So even if you don't, think they're going to go through some epic correction evaluation, there's certainly a case to trim exposure if you've let it go above your risk guidelines. And there's certainly other things that are outside of the FANG that you would like. I mean, in technology, I talk all the time to clients about diversifying on 3 axes, right? It's not just about the large caps in America, it's about the small caps. If you look at the valuation gap at the moment, it's at almost all-time highs. Plenty to be done in the small cap space. It's not just about America. The second phase is going international as well. Look at the small mid caps in Europe, great source of technology there. Obviously, EM now 29% of technology versus 26% of the S&P. And then thirdly, private investments. We see private companies staying private for longer. Average age of companies at IPO is getting ever longer. And the true nature of disruption often happens in young companies, which almost by definition are not listed. So we've actually retrofitted some portfolios recently where the weight and technology stays the same, 20, 30, 40%, whatever it was, but the amount of implementation in the big, large caps has actually dropped. And we've diversified across capitalization, geography, and into private markets as well. I think that's a better way to build a portfolio for the long term.
David, thank you very much indeed for that. Let's just take you to Brussels. We have shots of arrivals here for this EU summit. We had a wonderful picture of a very large stretch limousine, which we thought Angela Merkel might be about to get out of, and then they've taken the shot away. Can we show the shot we do have? Which is ho-hum, isn't it, quite frankly? That's very yawn.
Good architecture.
And, that is the red carpet that they will be walking down as they arrive for this EU summit. The budget is headline and centre as far as the conversation is concerned. And we've got an impasse at the moment over the bloc's budget proposals for the next 7 years. Overnight talks only concluding just before 7 a.m. CET. Let's get out to Sylvia, who has more on this from Brussels. How are they going to fill this hole?
Well, they don't know how to answer that question themselves yet, Jeff. So essentially, after an all-nighter here in Brussels, the leaders are just about to arrive again for the second day of their talks. As you mentioned, the big impasse is over the next EU budget. And what we see is that we have 2 opposing camps. Some member states asking for a higher spending, therefore a bigger EU budget, and other countries saying that they want to spend less when it comes to the next 7 years, so between 2021 and 2027. This is the timeline that they have at this stage, and this is what they're trying to agree at this stage. But it's not just some member states asking for more money. The European Commission, the executive arm of the EU, is also asking some member states to step up their contributions. Let's take a listen to what some members of the European Commission told me here yesterday.
The proposals are never enough. Everybody needs more, because there are some policies which require a lot of resources. Let me talk about my specific field, which is security and defense, and we want to build a more ambitious Europe. For sure, the amount of resources allocated in this budget is not going to be enough.
This is the reason why we're negotiating. There are many different interests that have to be convened with this budget. But good is that, as I said, it puts emphasis on the modern policies.
So in that clip, you heard from Joseph Borrell. He's the head of foreign policy at the European Commission. And he mentioned that the current negotiating box, what the leaders call negotiating box, is not enough to support, for instance, areas like defense. And when it comes to the specific numbers, let me say that at the moment, what the leaders have been looking at is a proposal that includes 1.09 trillion euros for the next 7 years. That's about 1.07% of the total gross national income. And for some member states, that is a lot of money. On the other hand, some countries, and including the European Commission, the executive arm of the EU, say that's not enough. So let's see if the President of the European Council, Charles Michel, who is chairing these discussions, will manage to come up with a figure that pleases the 27 European members.
What's Ursula von der Leyen's job title again?
Von der Leyen is the head of the European Commission.
And what's her old job title? defence minister of Germany, wasn't she? No, she was the defence minister of Germany before. I just think it's fascinating. I'm looking at this on the bottom of our screen, and it says they want to spend more money on climate, digitalisation, and security. Security, that's very interesting. And I thought Germany was the big laggard when it comes to defending themselves in terms of their GDP commitment to NATO.
Actually, that's a very good point you're raising, Steve. When I look at the latest proposal from the European Council, there's actually a big increase when it comes to defense, and I'll share the numbers with you. So the European members, give me just a moment, want to increase contributions to the European Defence Fund from 0.6 billion euros to 7 billion euros. So that's a massive increase over the next 7 years. And I actually asked the European Commission why they're stepping up their contributions to a European defense mechanism rather than NATO. That could potentially upset President Donald Trump, as we know. And the response that I got was that actually that Trump should be happy about this extra investment, and that these figures are actually meant to help research and for the European Union to essentially streamline their defense spending. And with savings that potentially could come from that, then they could use that additional money towards NATO. But let's see if they will actually do that. But indeed, as you mentioned, Steve, this is a very important point. But we know from these preliminary figures is that they do want to increase defense spending. But let's see how the final numbers will look like.
Not often I say nice things to colleagues, but that was a brilliant answer because you weren't expecting it. So well done you. Thank you very much indeed. And you had the research ready as well. Extraordinary. Well done. Coming up on the show this weekend, it's heavyweight boxing déjà vu again. Deontay Wilder versus Tyson Fury, the rematch. This time, more money involved. We're going to break down the fight after the break.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under your new episode section. Happy listening.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Even a brand new laptop and tablet to use in school. Call IU, then tell them your dream.
1-800-967-1179. 1-800-967-1179.
With the money I've made on Poshmark, I've been able to pay for all our family's vacations.
I could pay for my wedding just on what I've made from Poshmark.
I've made over $10,000 and I was able to buy my new car.
Download the free Poshmark app now. If you're living with diabetes, then you understand the difficulties from painful finger sticks to worrying about highs and lows. If you haven't heard of continuous glucose monitors, listen closely. A continuous glucose monitor is a breakthrough technology that reduces finger sticks and warns you of dangerous spikes in sugar levels. If you meet these requirements, you may qualify to receive a CGM from Solara. Solara, your single-source solution for better diabetes care.
For me, Squawk Box is breakfast with the most interesting people in the world.
It's a privilege to get to talk to them every day.
It's more entertaining than any other morning show, but you get some useful information.
Squawk Box, weekday mornings, 6 Eastern, CNBC.
There are so many new sources of data available to investors. Satellite imagery might tell you about inventory management and how things are moving around the world. One area of real interest is the cloud, when you can use it for large-scale transaction processing. Machine intelligence can help us to identify market manipulation, insider trading, and other sources of fraud in the markets. You're going to see fintech creating more global markets, more global transactions, and less friction in the system. This is the future of business. I watch CNBC.
A lot of people treat their finances like their health, and for some reason they don't want to peel back the curtain and know what's going on. Figure out all of your expenses. I'm paying this much in rent or mortgage. I'm paying this much in Netflix and cell phone and car insurance. Then you can figure out what income you need to supplement. Figuring out where every penny is going is crucial to you understanding your own financial health.
Invest in you. Ready, set, grow. CNBC and Acorns.
It's the hotly anticipated rematch between heavyweights Tyson Fury and Deontay Wilder taking place tomorrow night in Las Vegas. The first fight in December ended in a split decision draw, with Fury winning most rounds, but Wilder looking dangerous apparently when landing punches. Fans are expecting another explosive contest this Saturday. The big difference this time is the purse. The fighters are expected to equally split up to $80 million, a bit like the JP Morgan bonus pool, dwarfing the $7 million split from the last fight. Both fighters' net worth has since soared, with Fury singing an £80 million 5-fight deal. A bit like when we get Dairy and Diary. Anyway, a 5-fight deal with ESPN as well. Quite frankly, I think they're both phenomenal athletes these days, and I want to see one of them fight this chap as well, Anthony Joshua as well. But David, you know a few things about boxing, don't you? Who's going to win?
Who's going to win? I think Tyson Fury's going to win.
In Vegas, that's a
in Vegas, it's a big. Firstly, I'd like him to win, obviously, in terms of nationality. But he has that awkward style where he like bounces around. And
can you show us a little bit?
He's kind of bouncing around like this, and like So obviously, I have absolutely no idea. I think he changed his trainer. I'm not sure if that's a good thing or a bad thing right now. But obviously, when they had the first fight, he'd only just come back and lost all that weight. I think he's been had another year or so to really dig in with his physique, and he's just such an awkward.
So nothing you don't talk about: calf strains, boxing, and occasionally financial markets.
But also the bigger problem.
Location too. I didn't get the reference to location. It's not like horses for courses, right?
Well, it's the judging. Things in sliced bread on this side of Atlantic. Went over to Vegas and just completely lost it. Didn't it?
It's also the judging. Boxing judging. If it's a points decision, is so. Is so subjective that an American on American soil, there's a little bit of, frankly, a bit of bias in the judges. The bigger issue with Tyson Fury is, even if you hit him as hard as you can, and he goes down, his eyes roll back into the back of his head, as it happened last time, he then gets up. Like, the guy is just incredibly hard to put down, and I think he gets inside fighters' head. This is the guy who beat Klitschko in Germany, so why can't he beat Wilder in Vegas?
Should we close at the show and talk about some markets again, and one punching bag out there, and that's been oil. Take a look at the trade around coronavirus, and you can see that the market dropped, and this week we've had a recovery of sorts, about a 3% move to the upside. But if you look at charts, you can see that oil doesn't move in a straight line up, and it doesn't move in a straight line down. So which direction are we going? Are we going back up, or are we going back down again?
I think most likely we would say up, because this recent drop has been about the issues in China. One would hope that they get sorted reasonably soon. We don't know that, obviously. The big picture remains oil is in this big trading range. If it goes too far towards 50 or below, you start to get real financial distress in credit markets, and that starts to hurt supply. If it goes up above 80, up in about 90, you start to get all of this extra supply coming on. And you also have the confluence of two trends. One is the growth of consumption in the emerging world, which is going to drive oil demand up. And the other, of course, is the environmental sustainable case for decarbonization, which will push it down. Obviously, if things are range bound, there's ways to play that through the derivatives market and generate income in that way. We do that every day for our clients. Very interesting ways to structure that and create income out of the volatility. And certainly, if you look at some of the oil majors, there's significant dividend opportunities there as well, as long as you are comfortable these companies aren't sitting on a lot of stranded assets. And I know that there's a recent report from JP Morgan on this. There's also, of course, Mark Carney's been talking about this for a long time and did so at our Sustainable Investing Conference last year, about the fact that if you are going to hit some of these climate targets and keep the temperatures down, then large amounts of these reserves can't be used. If they can't be used, then they're stranded. And is that going to be a financial stability issue for large companies going through into the insurance sector, going through into many sectors around there? No one knows, because, of course, for them to be stranded, we've actually got to decarbonize. And again, that is very difficult and long and politically sensitive.
David, have yourself a great weekend. Thanks very much for coming in.
Happy to be here.
Good to see you this morning. David Stubbs, International Private Bank Head of Investments and Strategy, or Head of Market Strategy and Advice. You choose. He joined us from JP Morgan Private Bank. That's it for Squawk Box. Bye-bye, everybody.
Get Social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under your new episode section. Happy listening.
Compression socks, but they're just so hard to get on. Until now. Introducing the all-new Copperfit Energy Socks, redesigned for the first ever easy on, easy off fit to help reduce swelling, relieve tired, achy muscles, and provide energizing support. A new blend of stretch fabric for the most comfortable, easy on, easy off compression fit.
Being a SWAT commander, we train to win. The Copperfit Energy Socks, they didn't feel like other compression socks. They totally exceeded my expectations.
Our most powerful copper-infused fabric, woven into our easy on, easy off compression sock to help reduce swelling discomfort from prolonged sitting or standing.
I'm 38 and a half weeks pregnant. Copperfit Energy Socks worked beautifully.
Extra support around the arch and ankles for increased support and relief of muscle aches and pains.
I'm so excited about these socks. I'm so much more energized to go do things after a day of work. They just slip right on, yet they still have that same compression that you want.
A soft cushion footbed for all-day comfort.
I'm on my feet at least 9 to 10 hours a day. These were fantastic. A lot of compression socks are a little too thin, especially for what I do. With Copperfit, I could wear these every day.
Feel more energized. Feel more active. Just feel better.
They just hug your leg. It relieves all the pressure that you have. I have so much energy, I can go, hey, you want to dance?
The first ever easy on, easy off compression sock. The most comfortable compression sock you will ever wear. Get your Copperfit Energy Socks now online at GetEnergySocks.com for only $19.99. Call 1-800-379-4969. Order right now and we'll include a second pair of compression socks free.
I've never felt anything like it before.
No more pain, no more swelling, no more achy, tired feet.
I can never go back to regular compression socks again.
Don't settle for ordinary. Ask for the original by name. Copperfit Energy Socks.
We are the dreamers. We come in a variety of colors
and styles,
a variety of sizes.
We come in different patterns
and different materials.
We are the dreamers.
Achieving your dream can take work.
I just wanted to do a career.
But don't give up.
Changing my life.
Don't ever give up.
Ignore the haters.
They didn't believe that I can do it, and I just proved them that I can.
Independence University.
IU is an online college.
Education online for a better life offline.
So your campus is wherever you want it to be.
Take classes when you want to take classes.
At IU, you receive the tools you need at no extra cost.
Even a brand new laptop and tablet to use in school.
You're going to keep that laptop and tablet when you graduate.
And IU's career services work really hard to help you get a job.
You've got to have dreams. Independence University.
Education online for a better.
Good morning. Welcome to Street Signs. I'm Joanna Versace.
And I'm Juliana Tattlebaum. These are your headlines.
European stocks go red amid coronavirus fears. Renault continues to delay China production, despite Beijing insisting that factories are getting back to work.
German manufacturing PMI hits a 13-month high in the February data, with private sector strength helping to offset a slowdown in services.
UniCredit shares see red as CEO Jean-Pierre Moussier is named as a frontrunner for the top job at HSBC, pitching him against current interim chief Noel Quinn.
And an all-nighter doesn't stop Angela Merkel's early morning after EU leaders make little headway in discussing the bloc's next budget. Commission President Ursula von der Leyen tells CNBC it's important to fund climate and digital policies.
This is the reason why we're negotiating. There are many different interests that have to be convened with this budget. But good is that, as I said, it puts emphasis on the modern policies.
All right. Good morning, everyone. It is a very big day for European data. We have had PMI numbers coming out all morning for France and Germany, but we've just got the composite number for the Eurozone. Let me bring you those numbers. The February flash composite PMI has come in at 51.6. That is actually higher than the number that we had for January, 51.3. Services PMI came in at 52.8, again an improvement from January, up from 52.5. And even manufacturing has come in much higher than expectations at 49.1 versus 47.9 in January. Bit of a surprise, I would say, Juliana, given that some people had been accounting for the fact that coronavirus would have an impact on these numbers, especially for the first couple of weeks of February.
Absolutely. And on that front, I think one of the notable components worth looking at is the new business index, which held steady at January's 7-month high, 51.3. So new business, of course, an indicator of what's to come, and that seems to be holding up.
Yeah, all right. For further information on what we should be looking at here and some of the market reaction, let's get out to Chris Williamson, the Chief Business Economist at IHS Markit, who joins us from the phone from Exeter. Chris, great to have you with us. And, of course, you actually publish these indices. I've got to say it's a bit surprising to see that the data hasn't fully reflected some of the weakness that we're seeing more globally on back of coronavirus. What do you point that down to?
Hi. Yeah, it's very interesting numbers because, of course, we had earlier Japanese and Australian PMI numbers which showed a coronavirus impact, but obviously Eurozone, the numbers have ticked higher. One of the things that we're seeing here is past stimulus is helping boost domestic demand, so offsetting some of the weakness. I mean, we have picked up quite a lot of damage, if you like, from the coronavirus impact, certainly in terms of export orders in manufacturing, as well as in the service sector. Companies exposed to things like travel and tourism, they saw noticeable weaknesses. But there's a hint here that we've not seen the worst of it yet, really, and a key indicator to look at here is suppliers' delivery times. Now, these times have lengthened quite significantly. We've got more delays than at any time we've seen since December 2018 in the Eurozone. A lot of these are linked to the supply chain disruptions arising from the COVID-19 outbreak in Asia. Now, this is leading to a drop in inventories of inputs in firms. So at the moment, they're managing to produce, but the question is, can they get enough supplies to sustain that production in March and April? That's the big question, and we may yet not have seen the full impact here in the Eurozone.
Another perhaps signal to look at is the Eurozone flash manufacturing PMI future output index has also come in at 57.9. That is below the 59.8 that was printed in January. Perhaps a sign, Chris, that the data for now seems to be holding up, but there may be a few warning signs for coming data in the next couple of weeks, and perhaps even from March, we may start to see more impacts from coronavirus.
Indeed, yeah, that does substantiate that assertion that it's the supply chain concerns that are hitting manufacturing. That many companies are okay for now, but they're worried about those future supplies and how it's going to dent their output in coming months. So lots to look out for. So we're not out of the woods yet with this. It's encouragingly strong numbers. The ECB in particular will be cheered by the fact that there seems to be a groundswell of rising domestic demand. I mean, we're still weak. I mean, the overall headline PMI is only commensurate with around just 0.2% Eurozone GDP at best. So very, very subdued growth. We've also got only weak employment growth. It's still the softest jobs creation trend we've seen for 5 years in Europe. So, as you know, there's a mountain to climb still before you're up to sort of potential normal trend rate growth. But the ECB will be cheered that there is this resilience from domestic demand helping support the Eurozone economy in the face of these export-led weaknesses linked to the virus.
Chris, how do you reconcile the more upbeat data coming out of Germany this morning from the PMIs, in particular on the manufacturing side of things, relative to expectations, with the ZEW survey, which came out earlier this week and showed a significant deterioration in sentiment around business activity in the country?
Yeah, well, so there's this difference between sentiment and actual, if you like, hard survey data. If you can do so. Like in Germany, for example, we have the PMI itself is based on what companies have told us they produced this month compared to the prior month, what their inflows of orders were compared to the prior month. It's not sentiment-based. They're looking at the actual numbers. Now, there is a sentiment aspect to it where we ask what their future output is likely to be, and that did deteriorate in February. So that matches those sentiment sides. But at the moment, you've seen the actual hard numbers tick up slightly. Now, there is one other sort of technical aspect to this that people need to be aware of, and that is your headline PMI. That's a composite indicator derived from 5 variables, one of which is suppliers' delivery times. Now, normally, more suppliers' delays is a good thing because it means supply chains are busy, there's more demand. But at the moment, supply chains are lengthening for the bad reason that there are these problems related to the virus. So the headline PMI is boosted by these longer delays. So that's sending a little bit of a false signal. Dig down, look into the data, and you've got indices that aren't quite so robust here. So German output index, for example, didn't rise as much as the headline PMI. So dig down into the detail, and you see things aren't quite as rosy as those headline numbers suggest.
What about the employment picture here? Obviously, that's a much more fundamental indicator of the health of the Eurozone economy, and I know it's a metric we've been following very closely when it comes to Germany. So give us a sense of what the labor market components of these PMIs are telling us about the Eurozone.
Yeah, so moving in the right direction. So you've got ongoing job losses in the manufacturing sector being offset by service sector job creation. Having said that, the actual rate of job losses in manufacturing is coming down. So moving in the right direction, the service sector jobs also been created, but it's way down on what it was, say, in the first half of last year when we were seeing strong jobs growth. So the overall picture of the labour market is still one of the weakest that we've had since around 2015, as companies are highly uncertain about the future and reluctant to add to their payroll numbers in the face of, at the moment, obviously the escalating virus threat to growth, but also the wider global economy and prospects of weak demand persisting. So still weak jobs growth, but some signs that it's starting to pick up, notably in manufacturing. Now, one of the indicators that we've got for manufacturing that's a good jobs leading indicator, if you like, is that orders inventory ratio, which has risen quite sharply in the last 2 months. It's quite elevated now. That suggests that firms are going to start producing more and start taking on more staff to meet that production, providing, of course, they can get the supplies in to sustain that output growth.
All right, Chris, thank you so much for fleshing out those numbers for us this morning. Chris Williamson, Chief Business Economist at IHS Markit. Let's now get you an update on the latest coronavirus figures. The National Health Commission in China confirmed nearly 900 new cases of coronavirus infections on Thursday, which marks a sharp increase from the day before. The figures include more than 200 people testing positive in 2 prisons in Hubei, the outbreak's epicenter. South Korea today has designated 2 major cities as special care zones after confirming 52 new cases. The country's national tally tops 150, the most in the 4th largest city, Daegu. China's Commerce Ministry expects a sharp fall in exports in January and February. The ministry said the epidemic has already severely disrupted the country's growth and international trade developments, but expects foreign companies to resume production in most places by the end of this month. An official warned that effects on foreign direct investment in the world's 2nd largest economy are likely to persist through March.
Juliana, let's talk about how markets are reacting. And yet again, coronavirus is front and center. Yesterday, we had a weak session for Wall Street, with most of the majors ending down about 4/10 of a percentage point. The Nasdaq down about 0.7 of a percentage point. Overnight, a bit more mixed. We had a better performance out of Chinese equities, but not so much for broader Asian equities. And you can see the handover to Europe this morning is mostly red. There are a lot of red stocks trading on the screen. Stock 600, you can see, is down about 0.3 of a percentage point. Overall, though, despite yesterday's losses as well, we are coming off record highs for the stocks index here. So yes, the last couple of days have been a little bit heavy. We've been focused on coronavirus and earnings season, but overall the picture is still quite positive positive. On the week, though, we are now looking like we're going to end the week slightly softer, down about 0.4 percentage point. Switching to individual bourses, let's break it down, though. You can see every single one of the bourses in Europe is actually trading on the back foot. FTSE 100 shy of 7,400, now down about 40 points, 0.5 percentage point weaker. I just want to draw your attention as well to some of the European indices. We obviously just had those flash PMI numbers come out for the month of February. Surprisingly strong. Even German manufacturing data came out stronger than expectations, and that is somewhat of a surprise. We are seeing that play out in euro currency here, less so in the indices, but something worth bearing in mind, especially if there's going to be catch-up in the March numbers. CAC 40 down 0.3 percentage point. Xetra DAX in Germany down about 0.1 percentage point. But let's talk about individual sectors, because we are coming to the end of the earnings season here. There has been quite a lot going on, particularly in bank space, actually. You can see the banks are down about 0.5 percentage point today. Some of the names that we're looking at, a lot of turnover in that space the last couple of days. UBS, obviously, yesterday with the announcement of the new incoming CEO, and today speculation over new CEO for HSBC, potentially from UniCredit. So those are some of the names that are reacting today in early morning. Luxury goods, we have down about 0.6 percentage point. Burberry is really coming under a lot of selling pressure today. They were cut by Jefferies close to the bottom of the FTSE 100. Oil and gas also, yet again, the complex coming under pressure due to demand concerns on coronavirus. Basic resources also trading on the back foot. And yet again, on a day like this, no surprise really that we've got defensives trading right at the top. Utilities up about 0.3 and real estate up 0.2 percentage point. Juliana.
Thanks very much, Jemana. Well, let me flesh out for you that banking story around HSBC that Jemana flagged. UniCredit CEO Jean-Pierre Moustier has reportedly emerged as one of the main external candidates to fill the top job at HSBC. According to a number of reports, Moustier has been in talks about the position, which is currently held by interim CEO Noel Quinn. Quinn himself remains a contender to stay on in the role permanently, having said he did not want to be a, quote, caretaker leader. An interesting reaction in the shares there. UniCredit down 2.5%, HSBC up just above the flat line, but interesting divergent share price reaction there.
And as I've just been talking about, it's been a busy couple of weeks in the C-suite at Europe's major banks. UBS has named ING CEO Ralph Hamers as the man to replace Sergio Armati at the helm of the Swiss bank. Rival Credit Suisse is now under the leadership of Thomas Gottstein after Tidjane Thiam stood down following the spying scandal. So many management changes in the last couple of weeks for European banking sector. There hasn't been a dull day the last couple of weeks. Just to talk a little bit more about the HSBC story, obviously this emerged in the last 24 hours. The FT and other media reports are citing that the UniCredit CEO is currently one of the two front runners. They have an interim CEO now, Noel Quinn, who obviously took the helm towards the end of last year. It's surprising because they came out with this huge restructuring plan just a couple of days ago, pledging to shed $100 billion of risk-weighted assets over the next couple of years, job reductions of 35,000. So it would be very strange that Noel Quinn comes out with such an ambitious plan only to be replaced by another CEO from another bank.
It definitely is, and I think that's one of the key questions surrounding HSBC and the restructuring plan they announced. On the UniCredit side of things, the share price reaction today, perhaps quite telling, because Moustier has been credited for really driving the turnaround in UniCredit. Yeah. He has driven a whole restructuring program there and really turned things around at that bank. Of course, for HSBC, this would be a huge benefit should he continue to do the same thing there. But clearly for the UniCredit side of things, this would be a blow.
What's really interesting about all of these moves that we're seeing is, in the case yesterday, we were talking about this, of Ralph Hamers coming from ING to UBS. Fundamentally, they are different types of businesses, both geographically and in terms of composition. And that would also be a very similar situation for HSBC. Let's not forget that HSBC, 70% of their revenues, even more, 70% of their profits, rather, are derived from the Asia-Pacific region. They're still, even though a UK-based bank, they're very much an emerging markets, Asian-focused bank, whereas obviously UniCredit, European and mostly Italian retail banking, corporate banking. So it does tell you a lot about how these banks and how management are thinking about the next couple of years, some of the challenges moving forward. But it seems like the sole incentive right now for HSBC is really just to get their books in order and undertake this dramatic restructuring that the bank really, really needs and that Noel Quinn spelled out.
No, really important strategy question moving forward for HSBC. HSBC to have somebody at the helm who has a very different set of experiences to bring to the table.
All right, Allianz has posted a better-than-expected rise in fourth-quarter earnings and hiked its profit target for 2020. Net profits came in at 1.86 billion euros, up more than 10% compared to the same period last year. Allianz also announced plans to extend its share buyback program by another 1.5 billion euros. Speaking to CNBC, the Allianz CFO Giulio Terzoriol said the buyback program is essential to maintaining capital discipline within the group.
It's more about efficient capital deployment. And if you see, we have achieved in 2019 an ROE of 13.6%. Our earnings per shares compared to the level of 2016 are up double digit. And clearly this is a consequence of good operating performance, but also of discipline in capital management. And buybacks are very essential to preserve this discipline in capital management.
In the auto space, Renault shares are lower after alliance partner Nissan said it will delay production in some of its Chinese factories due to the coronavirus. The Chinese car maker has 2 plants in the Hubei province, the center of the coronavirus outbreak. All right, we're going to squeeze in a quick break, but do stay with us. European leaders arrive for day 2 of budget talks, with negotiations still at an impasse. More when we come back.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under the Your New Episode section. Happy listening.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Computer and hope he chooses the right part. Go to rockauto.com. Auto and body parts from hundreds of manufacturers. Choose the brands, prices, and features you want. Auto parts at the lowest price. Conveniently delivered to your home or business.
All the parts your car will ever need, Rock Auto.
For drug-free sinus and allergy relief, experience Navage.
This time of year, I get so stuffed up, but Navage flushes my sinuses so I can breathe again.
Navage uses powered suction to flush out allergens, germs, mucus, and dirt.
My doctor recommends Navage to breathe better through my nose, and it works. Congestion's gone, and I feel great.
And Navage is so much easier than a neti pot.
Trusted by happy noses everywhere, Navage is nature's decongestant. Online and at these fine retailers.
We are the dreamers. We come in a variety of colors
and styles,
a variety of sizes.
We come in different patterns
and different materials.
We are the dreamers.
Achieving your dream can take work.
I just wanted to do a career.
But don't give up.
Changing my life.
Don't ever give up.
Ignore the haters.
They didn't believe that I can do it, and I just proved them that I can.
Independence University.
IU is an online college.
Education online for a better life offline.
So your campus is wherever you want it to be.
Take classes when you want to take classes.
At IU, you receive the tools you need at no extra cost.
Even a brand new laptop and tablet to use in school.
You're going to keep that laptop and tablet when you graduate.
And IU's career services work really hard to help you get a job.
You've got to have dreams.
Independence University.
Education online for a better life offline.
1-800-967-1179. 1-800-967-1179.
Virus fears, market volatility, and the impact on your money. Time to buy or hold. Strategies ahead of the first trade on Squawk on the Street. 9 a.m. Eastern today. Watch or listen live on the CNBC.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under the Your New Episode section. Happy listening.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow and tune in on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Through at this meeting, and she indicated that that's very unlikely, and she actually suggested that there is going to be another summit to figure out the next EU budget. But let's take a look at her remarks from moments ago.
I'm willing to stay, and I'm prepared to stay the whole weekend, but no, I don't think we're going to reach an agreement.
So another meeting, another summit in March?
Yeah, probably.
When?
I don't know. It's not my decision.
So the leaders have just reconvened for their second day of discussions after they were here the entire night. Throughout the night, the president of the European Council, Charles Michel, who's in charge of figuring out essentially how the next EU budget is going to look like, he had bilaterals with every single member state until 7 a.m. local time. And now they're talking together again to see if they can come up with a final number for the next 7 years of EU spending. But as I mentioned before, it seems very unlikely that they will achieve that today. We still have the same impasse. On the one hand, countries that want a higher spending, a bigger budget, and on the other hand, countries that actually want to contribute less to the next EU budget. So let's see when and how they will figure this out.
It's never easy with European leaders, Sylvia, as you know very well from your time in Brussels. Thank you for the coverage this week, and we look forward to seeing you back there again in March, as it would be.
All right, well, turning now to German politics. Hamburg heads to polls this weekend. It's the first regional vote since the chaotic state election in Thuringia earlier this month. The Social Democrats are expected to win, but not without losing a significant portion of votes to the Greens. Angela Merkel's CDU is polling at all-time lows in the northern German state as the party searches for her successor. Annette now joins us from Frankfurt. Annette, give us a sense of how polling has evolved since that debacle in Thuringia and what's at stake here in these elections in Hamburg this weekend.
Well, actually, there is officially not a lot at stake for the national level, but unofficially, I think the CDU, with a record low showing in that election, will put more pressure on the party to actually get their act together. Germans like stability and they like to know what comes next. And here comes the problem. It's clear that Angela Merkel will not be the next chancellor in Germany or for Germany, but it's also not clear how she's going to organize her succession now, because clearly the experiment didn't work with AKK, Annegret Kramp-Karrenbauer, who surprisingly resigned. The experiment was that there was a chairman of the CDU who was not the chancellor of Germany, and this is apparently not working. So now the calls are getting louder and louder that Angela Merkel should actually resign early to make space for a new chairman of the CDU, replacing her also in the chancellery. Highly unlikely as a scenario, but still there are some odd chances that this is going to happen. But the Social Democrats, who are forming the current coalition with Angela Merkel's CDU, are already saying that they only stick to that grand coalition if Angela Merkel also stays in the chancellery. So the CDU is probably in the most unstable phase ever since Angela Merkel took over many years ago, when there was an affair surrounding party money with Helmut Kohl still at the reign of the party. So I guess the CDU needs to get its act together sooner than later in order to regain popularity with the voter as well. Another side effect from Thuringia is actually that the AfD is falling in their popularity, and at the same time also the Liberals are falling in their popularity as well. So whether they will manage to actually get more than 5% of the votes, which is the German threshold to actually enter a parliament, remains to be seen. But that, back to you.
Excellent, Annette. Thank you for the breakdown. We await those results on Monday. Going to be an important one for the German political landscape. Elsewhere, stay with us because the White House is keeping the pressure on Huawei after a key Downing Street meeting. We'll hear from the Chinese tech giant's chief technology officer, that is the CTO of Huawei, coming up next.
It's Social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under the Your New Episode section. Happy listening.
Slice a single apple wedge when you can wedge it all in one snap. NutriChopper comes with the razor-sharp interchangeable stainless steel blades you need to make all of the cuts you want and all incredibly quick. Chop thick slices, chop thin slices, chop cubes, chop sticks, and wedge whole fruits and vegetables in just 1 second. Slice it and cook it right in the pan, right on your stove. Chop and slice right into the pot for a family-sized stew with no mess. Snap and slice a fruit salad for the kids right into the bowl in seconds. Slice up a healthy salad for a quick and easy meal on the go. Cube meats and cheeses quick, in a snap. And NutriChopper comes with a perfect portion container and fresh-keeping lid so you can slice it, seal it, and store it all in one. To clean, simply rinse or rack it in the dishwasher. Then lock it to store it safely in a drawer. And now the NutriChopper with the thin slice, thick slice, wedge, and cube blades. And the slice and store container and lid, a value of over $40, is yours for just $19.99. But wait! Order now and we'll even pay the shipping for you. You get the complete NutriChopper set with blades and container with lids, all for just $19.99 with free shipping. Here's how to order.
To order, call 1-800-257-9942 or go online at NutriChopper.com. That's 1-800-257-9942 or go to NutriChopper.com. Order now.
You may know Viking for our award-winning river cruises. But did you know Viking is also the best at sea? Voted by readers of Travel and Leisure 4 years in a row. Discover fascinating destinations and enriching activities on our elegant ocean ships. Designed for just 930 like-minded travelers. Viking, exploring the world in comfort.
Next on Squawk Box, insight from St. Louis Fed President James Bullard on the U.S. economy, outlook on global trade, and impact of the coronavirus outbreak. Today on Squawk Box. Watch or listen live on the CNBC app.
Welcome back to Street Signs. I'm Juliana Tattlebaum.
And I'm Jemima Versace, and these are your headlines.
European stocks go red amid coronavirus fears. Renault continues to delay China production despite Beijing insisting that factories are getting back to work.
German manufacturing PMI hits a 13-month high in the February data, with private sector strength helping to offset a slowdown in services.
Unicredit shares see red as CEO Jean-Pierre Moussier is named as a frontrunner for the top job at HSBC, pitching him against current interim chief Noel Quinn.
An all-nighter does not stop Angela Merkel's early morning after EU leaders make little headway in discussing the bloc's next budget. Denmark's prime minister downplays hopes of a deal on his arrival for the second day of talks.
I'm willing to stay. And I'm prepared to stay the whole weekend, but no, I don't think we're going to reach an agreement.
Another meeting, another summit in March?
Yeah, probably.
When?
I don't know. It's not my decision.
All right, more positive data, this time out of the UK. Let's bring them to the flash manufacturing PMI numbers for February in the UK. Came in at 51.9. That is an improvement from the 50 flat number seen in January. The services number also came in at 53.3, a slight dip from where we were back in January at 53.9.
And so another strong set of numbers from the European Union, this time, of course, from the UK, following on the stronger data earlier.
Yep, exactly. And we are seeing a bit of an uptick in the pounds here. We also saw an uptick in the euro on back of this, generally speaking, much better data out of both blocks in the last half hour. So that is the picture for sterling. You can see right above 129.20, so up 0.3 percentage point. All right, let's bring in an expert on the subject, Fabrice Montagne, the chief UK economist from Barclays. Fabrice, your take on the numbers and the UK numbers that we just got right now, surprisingly strong as well. Coronavirus doesn't seem to be biting yet.
Yeah, listen, quite a set of interesting data this morning across Europe, including for the UK. So interestingly, though, the composite indicator, which merges manufacturing and services, comes in unchanged, a little bit along the lines that we expected, meaning that the kind of rebound we saw in January kind of lives on in February. However, the composition here is quite surprising, with manufacturing coming in with a punchy number, while services show some signs of weakness. Now, everybody will want to read into that, whether rebound in the UK or the impact of COVID-19. And maybe in the case of the UK, COVID-19, for instance, has more impact through tourism and shopping than it might have through manufacturing. But we will need more data for that. But undoubtedly this morning, this is a constructive data, and that points towards, call it a 0.3% quarter-on-quarter GDP growth in Q1, at face value. So that's good news.
I think the immediate first question for investors here, Fabrice, is what this data means for the Bank of England. It's certainly, when you put it into context, what we heard on the retail sales front and the inflation front this week, also both offering a bit of evidence that the UK economy could be turning a little bit brighter.
I agree. The story in the UK, nobody really challenges the idea that a rebound is in the making, but the questions are how big a rebound, how sustained a rebound. And on that front, the Bank of England actually runs a very conservative forecast. They're expecting 0.2% growth quarter on quarter in Q1. So their bar to be happy is actually fairly low. And, PMIs as this morning, or you mentioned retail sales to some extent, but to some extent only inflation as well, does suggest that data for now is slightly stronger than the Bank of England expected. So the natural conclusion for that is that we shouldn't expect, any rate action anytime soon. And that was kind of the view we had in January, meaning that in January you had weak data coming out of Q4. 19 was pretty bleak. And you could generally, build a case for a rate cut. But that will be increasingly difficult as the rebound takes hold.
Yeah, we also need to address the elephant in the room, Fabrice, and that is that the formal talks between the EU and UK are set to begin at the beginning of March. Both sides seem to have set out pretty strong negotiating stances. There's a lot of daylight between the two, and it very much seems like we're in a situation of trade-offs, access for regulatory alignment, and the UK are being very vocal on this point, that they want to retain full regulatory autonomy at the end of the day. What type of an impact is that actually going to have when you think about it from an economic perspective, looking at your projections, given the trade-off between the two?
So we're not too fussed with, given the latest statements, or, these are the very early stages of the negotiation. Negotiations have actually not even started. We think, both sides are digging trenches, and let them do so. Most of what they're saying was already known, in the last year or the year before, for that matter. We watch this, we read the papers that are published, but I think we'll have more interesting movement when it comes to negotiations and trade in the second half of this year. And if anything, to answer your question, we do expect some downside risks going into the second half of this year. If the UK government insists on maintaining all its regulatory autonomy, that means limited access to the single market. That means that, sectors like industry or some service sector, for that matter as well, will have to restrict their activity, will have to maybe relocate, maybe change some value chains, etc. And that will come at a cost that will increasingly become visible as we get closer to the end of the year.
Fabrice, I just want to ask you lastly on the new immigration rules proposed by Boris Johnson and his government. The UK plans to introduce this points-based system when it comes to immigration. What kind of impact would you expect this to have on the UK economy?
So listen, so far, a lot of growth we've seen in the UK has been generated through immigration, through demographics. UK had a very strong population growth in recent years, both because of birth rates and because of immigration. Now, the natural conclusion of a restrictive immigration system, meaning that you're bringing down the headline growth that you can achieve. Now, it is not said that because you're introducing a point system, that by definition you will become restrictive. You're just introducing means to monitor and manage immigration if you wish to do so. But all the headlines I've read on restricting low-skilled immigration, etc., that will have to be worked out as the year goes by, because a lot of sectors think about construction, think about distribution, hotels, restaurants, retail. They rely on a lot of European immigration, and not all of that is highly skilled. So there will be a lot of fine-tuning happening between the announcement that has been made and the actual implementation of that system next year. And I will wait for that fine-tuning to happen before I change my growth forecast, obviously.
All right, Fabrice, thank you very much for your thoughts on all things UK on the back of those PMI numbers. Fabrice Montand, the chief UK economist from Barclays. We're also keeping a close eye on EU arrivals at the summit. We were just talking about that with Sylvia. It was a very late evening, or I should say early morning, for many of these EU leaders that the meeting actually wrapped up at 7 in the morning. So real all-nighter. Right now, we are expected to see some of the major leaders arrive for day 2 of the summit. So we'll keep you posted as and when. But for now, Juliana will give us a breakdown of how markets are doing.
Thanks very much, Jemana. Well, as you can see here, red across the board for European markets on the final day of trade this week. The main focus for investors this morning, and no doubt those February flash PMIs that we've got through for the European economy, overall better than the market had been expecting. But interestingly, we are seeing this pullback in stocks. This does come after a weaker session on Wall Street yesterday. The Nasdaq broke a 3-day win streak. But also, to put that stronger data into perspective, the question here for investors was, if weaker data started to come through, would that increase the chances of more fiscal spending? So now they're digesting what this stronger data may mean for the fiscal outlook for the European Union and also, of course, monetary policy. But putting it all together, investors kicking off the final day of trade this week on the back foot. Let's take a look at FX markets. Some interesting moves here, certainly in comparison to what we've seen recently. The euro trading much firmer versus the dollar this morning, about 30 basis points higher, around 108. The euro has been really in free fall versus the greenback over the last month or so in the wake of that increased demand for the dollar amid the coronavirus outbreak. Now this morning, the pound also trading much firmer versus the dollar, up about 30 basis points as well, but still below that 130 mark. But just some interesting moves relative to what we've seen in the last few weeks in terms of FX. Now, U.S. futures, let's take a look at what all this means for Wall Street. It looks as though we're in for another weak session stateside. The Dow looking to open at triple digits lower. S&P and the Nasdaq also looking at a weaker start. And as I mentioned, this follows a weak session yesterday with the Nasdaq breaking a 3-day win streak. Jemana?
All right, let's turn to politics. The White House acting chief of staff was reportedly left unimpressed by the UK Prime Minister's aide, Dominic Cummings' attempt to prompt coordination on finding alternatives to Huawei on the UK's 5G rollout. This is according to The Guardian. Arjun joins us with more. No surprise that the US were unhappy with the UK's decision anyway to operate and allow Huawei to continue to operate even on a very limited basis. And it seems like that's still very much the case. There doesn't seem to be any agreement in sight between the UK and US, coming obviously at a very important time for those relations.
Yeah, the US's stance is very much that no country that it's been speaking to, particularly its allies like the UK, should be using Huawei equipment at all. And that's really the stance it's continuing to maintain, continuing to put pressure on. But what this whole sort of saga with Huawei has revealed is a greater push from the US to look for alternatives to Huawei, but also to Ericsson and Nokia to try and find perhaps where the US can play. We know that the US doesn't have a direct competitor to Nokia, Ericsson and Huawei. It does have players that play in 5G in various areas, the likes of Nvidia and Qualcomm in chips, for example, Cisco as well in some networking equipment, but it doesn't have someone who could do sort of the whole end-to-end 5G setup. And so there's been a lot of suggestions. We heard Attorney General William Barr say the US should take stakes in Nokia and Ericsson, for example. You've heard a number of lawmakers say that the US needs to free up some federal funds in order to help financing costs for telcos, because one of the things where you've seen Huawei has advantage in its cost competitiveness, but also the financing deals that Chinese banks are able to give to telcos. Of course, many telcos under pressure from a profitability standpoint. Right. This looks very attractive. So there's suggestions that the US needs to use some of this money to help the financing deals as well, and then also help invest invest in some other companies that would be able to compete with Huawei. So a number of suggestions. There hasn't really been a sort of coordinated effort as such. But I had a chance to catch up with Paul Scanlon. He's the Chief Technology Officer of Huawei's networking business, and asked him a little bit about the US's push to wean itself off some of the reliance of the big companies and create its own rival to Huawei. Let's listen in to what he had to say.
The 5G standards, from discussion to standardization to, we'll say, the early launch, say early last year, that's about 10 years, okay, 10 years. And that's building on a standards body that exists, ETSI plus 3GPP, together with companies like industry bodies like GSMA, etc. But you've also got the collective group of all the carriers, the operators, and also representatives from government, often some of the regulatory peoples. So they're the people who have been developing these standards-based things. So if you look at things like ORAN or Open RAN, and they're very different, but if you just look at those things, they don't have that sort of collective group, nor the standards and interoperability. There's a lot of complexity there. That doesn't mean it can't happen, and it won't happen. But, whether the one key thing is that perhaps the US has underinvested in this area of technology. It's been focusing on other things. Perhaps one of the reasons China and Huawei have been moving forward is because we realise that those things are terribly important to the world for many different areas. You mentioned, you come back to the industrial cases, yes? So, the US will do what the US does, and whether they back ORAN or Open RAN or whatever, I wouldn't say it doesn't matter. Of course it matters, but that's a very, very long game, and that has its own sort of complexity built into it. And Huawei's been addressing and looking at those things ourselves.
So it's unrealistic to expect the US to sort of create a company out of nowhere in the near term that could compete in the 5G space.
It will be a challenge.
Wow, really interesting comments there coming out of the CTO of Huawei's carrier service, you said. But essentially the point that he's making is the point that we all know, which is that the US is essentially underinvested in 5G. That's what you were talking about. But then, it's easy for them to say that given the amount of subsidies and support that Huawei has got from the Chinese government. It's not an equal or fair playing field here.
Yeah, well, Huawei's point, of course, is that it's no different to any other technology business that gets state backing. We've seen that, a couple of decades ago with the US's semiconductor industry. One of the reasons it's so strong nowadays as well. That's Huawei's positioning on this, of course. But yeah, I think it's very clear that the US has underinvested. I think it'd be very difficult, and part of what Paul Scanlon was saying there is that the 5G standards, they've taken about 10 years to come up with, finalize, and also implement. And that's a long, long time. So it's not like the US can whip up a company out of nowhere. And I think they've sort of gone past their idea. What they're thinking about now is what can we use existing architecture, existing companies. We're happy with Ericsson and Nokia. We're happy with potentially even Samsung and some of the smaller players in the US. What they don't have is an end-to-end sort of solution, but what they are thinking is about, can they bring these companies together? Can they release some funds that could potentially help them, block Huawei out of markets? If they're able to offer a viable alternative to other countries and say, hey, we can provide everything for your 5G network, just don't use Huawei, then that's the best solution. And that, for now, seems to be the stance the US is taking and the kind of push they're taking when it comes to trying to push their own 5G.
Huge challenge, I should say, that the US needs to think about over the next couple of years. It's certainly a story that isn't going to go away. Arjun, thank you for breaking it down for us.
All right, and keeping with the topic of tech and telcos, T-Mobile and Sprint have renegotiated the terms of their merger, leaving major Sprint shareholder SoftBank with a 24% stake in the combined company. That's down from 27% previously, while T-Mobile's parent firm, Deutsche Telekom, will take a 43% stake in the new entity. SoftBank agreed to the change in a bid to avoid a delay to closing the deal. That's according to Reuters. Well, this, of course, has been a long time coming for Sprint and T-Mobile. If you have any thoughts on the deal, fascinating space, any thoughts on Huawei, you can tweet us at StreetSign CNBC or tweet us directly at CNBC Shu, and I'm at CNBC Juliana. Now, coming up on the show, she's a pop icon that you can't get out of your head. With over 30 years in the industry, I sat down with the star in Dubai, and we've got a snippet of that interview you won't want to miss.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow at TuneIn and always be in the know.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under your new episode section. Happy listening.
25% off your purchase at Olay.com. Brand power helping you buy better.
Selling on Poshmark is crazy simple. All you have to do is post a picture, add a description, add a price, and you're pretty much good to go. Right now I'm selling Air Jordans and Nikes and Adidas, anything really performance related or style related.
Download the free Poshmark app now.
Carl and Alan have a lot in common. They're staying at the same hotel with the same outdoor space, the same pool, the same hotel experience. But there's one big difference. The price. You see, Carl found the hotel on his usual website, whereas Alan used Trivago to scan hotel deals from the major booking sites and save $30 a night. Carl, try Trivago next time. Hotel Trivago.
Having an idea for a business was easy, but without the right team and the right tools in place, it's just an idea. That's why I use NetSuite.
NetSuite is the world's #1 cloud business system. Schedule your free product tour right now at netsuite.com/grow.
It's time for a special announcement from Four Seasons Sunrooms and Windows. Transform your home and change your life with a Four Seasons sunroom. And watch this announcement until the very end for a special code for exclusive additional savings. And now it's time for Four Seasons. It's time for family gatherings, to stretch imaginations, to get together or find some time alone. It's time for a Four Seasons sunroom. And right now, Four Seasons has special offers that let you have it all for less money than you thought. With no money down and no interest for 12 full months. Call Four Seasons and get your free quote and information today. Thanks for watching. Now call the number on your screen and mention the special code TIME and receive exclusive additional savings on your new sunroom. Four Seasons. It's time.
Read yourself past the millions and millions of stories uploaded each day, past the endless memes, past all the social media that's making your head feel like. Read yourself better.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under your new episode section. Happy listening.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
To hold the line of the central bank's benchmark rate at their past two meetings. Clarida reiterated that the U.S. economy is still strong, although the Fed is monitoring the impact of coronavirus.
There is exports to China, and obviously part of the commitments in the Phase 1 deal was for U.S. exports to China to ramp up. So obviously we'll be looking at that. Supply chains are very important. So to the extent that supply chains are disrupted by the coronavirus, that could show up in terms of inputs to the U.S. economy. And obviously you have the effect overall on global economic activity. So we're really looking at multiple indicators right now. But I think the fair point is, sitting here in February, it is too soon to tell. Market pricing on rate cuts is a little tricky because there's the market expectation for rates. There can also be term and liquidity premia. So what I prefer to do is to also look at surveys that many folks do of market participants about what they think we're going to do. There's obviously a probability of outcomes, but I don't think when you ask folks, they're pricing in that rate cut now, even though market pricing might suggest that.
Roger Stone, a long-term advisor and friend to President Trump, has been sentenced to 3 years and 4 months in prison. Stone was found guilty of witness tampering and lying to a congressional committee investigating Russian interference into the 2016 U.S. elections. Trump hit out at the sentencing, saying Stone was, quote, treated very unfairly. The president hinted that while there were no immediate plans to pardon the veteran Republican, he would at some point make a recommendation. Meanwhile, President Trump lashed out at his acting director of national intelligence, Joseph Maguire, earlier this month, according to a top intelligence official. It said he was angry after learning one of his team had informed a bipartisan House Select Committee that Russia preferred the president for re-election and might interfere to secure the win on his behalf. President Trump announced he is replacing Mr. Maguire, a veteran Navy Vice Admiral, with Richard Grenell, the current U.S. ambassador to Germany, known to be an ardent Trump loyalist.
All right, let's talk boxing.
Let's.
It's the hotly anticipated rematch between heavyweights Tyson Fury and Deontay Wilder, taking place tomorrow night in Las Vegas. Busy week in Las Vegas. The first fight in December ended in a split decision draw, with Fury winning most rounds, but Wilder looking dangerous when landing punches. Fans are expecting another explosive contest this Saturday. The big difference this time is the purse. The fighters are expected to equally split up to $80 million, dwarfing the $7 million split from the last fight. Both fighters' net worth has since soared, with Fury signing an £80 million 5-fight deal with ESPN. Gosh, it's quite lucrative being in boxing.
Maybe something to consider.
On my mat leave, yeah.
We'll watch this space. All right, now some exciting news for you, for me as well. With a career spanning over 30 years, Kylie Minogue is one of the pop music's biggest stars. The singer sat down with me in Dubai and opened up about her life on stage, as well as giving this piece of advice up to up-and-coming female artists.
When I did start, I didn't know anything about anything. I do consider myself very fortunate, though, that I got through it okay. And I would say that is down to not only the people that I encountered, but the way that I was raised. My manager was very, protective and considerate. But definitely my mum raised me and my sister. There was never a question of, can you do this as a female or not? It was, everything was possible. So my advice to them would be, God, where do you start? Try to be true to yourself. And the beautiful thing that I've discovered is experience. There's no shortcut to learning your craft. Some people are blessed and they seem to have it all from the outset. I didn't. I had to learn. I fell over so many times. I was pushed down so many times, but you have to find your way if you want to get through that.
You can see my full interview with Kylie Minogue on the CNBC Conversation on Saturday at 6 p.m. CET and Sunday at 7 p.m. CET right here on CNBC. Jaman, I have to say, I have never felt taller in my life.
I have to say, I've never seen you look so tall in my life.
But on a more serious note,
I honestly, I can't get all of the Kylie Minogue songs out of my head now. I know we're supposed to talk about the interview, but all I can think about is, I'm spinning around. What was it like actually talking to her, though, because she comes across very, very humble, and it really registers that she has been very lucky with her career, and also started out at a time where there was no social media. It was very difficult to break into first entertainment space and then go on into showbiz.
Well, I'm first of all very impressed with how many of her songs you've worked into this chat.
For you.
But no, on a more serious note, she was incredibly humble, and I think her advice to up-and-coming female artists is, advice that we can all take. That you will get, you will stumble, you will fall, you will get pushed down. It's all about just continuing to go and building up experience. And I thought that was a really great takeaway, and would definitely encourage you to watch that full interview. It was an absolute pleasure to speak with Kylie.
Yeah, I would absolutely love to see what she has to say about that, especially given the longevity of her career. She's been going on for 30 years now. That's really, really impressive, especially in this day and age of the fleeting social media fame. People become famous for days, months at a time, and then disappear off the radar. Kylie Minogue has been around for a really, really long time.
Oh, 30 years. Very impressive. All right. Well, let's get back to what's happening here in Europe. We're all keeping a very close eye on Brussels. European leaders remain at an impasse in budget negotiations for the bloc as the second day of talks get underway. German Chancellor Angela Merkel and EU Commission President Ursula von der Leyen are among the early arrivals after talks ended just before 7 a.m. CET. That's 7 a.m. Danish Prime Minister Mette Frederiksen told reporters she doesn't see a deal being struck this weekend.
Clearly the leaders are flooding back in for day 2 of the second day of the European summit. They're probably all exhausted after the late finish. All right, quick look at U.S. futures before we head out and before I head out on vacation. These 3 futures are pointed a lot lower. Dow seen opening up about 170 points lower for the session. But that is it for Street Science. I'm Giovanna Versace.
And I'm Juliana Tattlebaum. Worldwide Exchange up next.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under your new episode section. Happy listening.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Electricity costs are high, which helps reduce your electric bill, saving you money. And when a power outage occurs, PowerCell is ready to supply backup power to your home. PowerCell's modular design allows for easy customization for any home or budget. And PowerCell is backed with a 10-year limited warranty.
It was a simple installation, very neatly installed. It was done very quickly and efficiently. Since installing our power system, we've been experiencing a savings of $1,500 a year.
Generac has been a trusted provider of backup power solutions since 1959 and provides 24/7 customer support.
The battery storage solution in combination with the solar has been one of the best investments we've ever made.
Special financing is available with low monthly payment options. You will likely qualify for tax credits and energy rebates, which could save you up to 30%, adding to the savings you'll enjoy over time with PowerCell. Call now to schedule a free in-home assessment. The call is free, the assessment is free, and there's no obligation to buy. Act now to receive PowerView, Generac's home energy monitoring system, a $300 value. With PowerView, easily keep tabs on your energy consumption, monitor your battery usage, and track your savings. Don't wait. Call or go online now. PowerCell. Savings powered by the sun.
We got one of those new purple mattresses, and it is amazing. You have to try it.
Oh, this doesn't feel like memory foam.
No.
This feels amazing.
Right?
What is it?
Actually, it's called Purple, and it's a completely unique comfort technology, meticulously designed to cradle and support the human body.
Cool.
Bundle up and save with Purple's President's Day sale. Visit purple.com/TV.
Do you worry about going to the dentist? Well, relax. The Carefree Dental Card is now available in your area. Call the number on your screen and we'll send your actual card at no cost today. With the Carefree Dental Card, you go to the dentist whenever you need and you instantly pay a lot less. The Carefree Dental Card is just $15.95 a month. So call now and make going to the dentist carefree.
Call 1-800-478-0809 to receive your free Carefree Dental Card information kit.
CNBC's elite list of disruptive innovators is back.
It's a big moment for Indigo, obviously, but it's a big moment for agriculture.
Nominate your company for CNBC's Disruptor 50. Go to cnbc.com/disruptors. Deadline extended to February 21st.
Wondering which credit card is right for you? Introducing CNBC Select, the authority on all things credit cards. We do the research, you reap the rewards. Head on over to cnbc.com/select and take control of your money.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under your new episode section. Happy listening.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow at TuneIn and always be in the know.
And a lifeline for Sears that may end up being too little too late for that struggling retailer. And the wait is over for Baby Yoda fans everywhere. It's Friday, February 21st, 2020, and Worldwide Exchange begins right now. To the show, I'm Dominic Chu, in today for Brian Sullivan. Here's how stock futures are setting their Friday up today. You can see here the stock futures indicating a 140-point drop for the Dow Jones Industrial Average. The S&P would be opened down by about 17 points, and the Nasdaq off by 65. Now this, after a wild ride yesterday that had the Dow down more than 350 points at one point before ending the day down still 128 points. But off the worst levels of the session, you can see there on that time lapse a huge volatile trade in yesterday's session. Now with the bond market, we are seeing again yields moving to the downside. 10-year benchmark note yields now below the 1.5% mark, 1.48% the last trade there for 10-year U.S. Treasury note yields. 2-year note yields, 1.37% as well. So Treasuries, certainly a key focus as people buy up the safety of those U.S. government bonds. Now let's send it over to Jumana Bersecci in London with a live update on what's happening around the world. Jumana, good morning.
Hey, Dom. Yes, good morning. So the handover from Wall Street, as you just mentioned, was pretty negative overnight. And in fact, you can see for Asian markets, the only little bit of green that we have is for the Chinese indices here. Shanghai Composite slightly higher on the session, up about 0.3 of a percentage point. The tech sector, Shenzhen Composite, faring slightly better, up about 1.1%. And this on reports that the Commerce Ministry have said that business is returning back to usual again. So it looks as though there has been a slight pickup in activity on mainland China. Not so much the case actually for South Korea. Here you can see the Kospi got hit hard overnight, down 1.5%. And worth mentioning that outside China, the #1 number of cases is actually occurring in South Korea. So that's one of the reasons why the Kospi trades so heavy today. Chip makers in focus there. SK Hynix down about 1%. They said that 800 of their workers have quarantined themselves. So pay very close attention to what's been happening in South Korea as well. So it kind of a negative handover from Asian markets into European markets. Let me just show you the picture for what's been going on in Europe this morning. We've actually had a lot of macro data come out. The PMI numbers for February came out this morning, slightly better than expectations. We had expected to see some knock-on effects from coronavirus on the Eurozone numbers. Hasn't really transpired. But that being said, you can see there is still a lot of red on the board. FTSE 100 down about 0.5 percentage point. Some of the names that we're looking at there, luxury, Burberry right at the bottom, another luxury name that's being hit by the coronavirus impact. Obviously, a lot of exposure to the Asia-Pacific region for that particular stock. CAC 40 in France down about 0.3 of a percentage point. There we also had some weakness in the manufacturing PMI numbers this morning. And then Xetra DAX in Germany just below the flat line. You can see Spain is the only index really that's inching back into the green. But putting it all into perspective, worth mentioning as well that Eurozone stock 600 is still coming off record levels. It's been negative today, was negative yesterday, but overall we still are coming off record high levels. So perhaps investors are taking a bit of a breather in light of the mixed macro data and the end of the earnings season, Dom.
Here in the U.S. as well, Jumana Bersecci, that little risk-off feel permeating through the markets all over the globe today. Thank you very much for that update, and have a nice weekend. Well, let's get a look at some of the other top stories that we are following. Rahel Solomon is here with those. Good Friday morning to you, Rahel.
Good Friday morning, Dom. So global air travel demand is set to decline for the first time since 2009. This is because of the coronavirus outbreak. According to the International Air Transport Association, the virus's impact on demand will cost airlines globally more than $29 billion, mostly in the Asia-Pacific region. The group estimates that Chinese airlines will lose some $12.8 billion in revenue because of the outbreak. The trade group, which represents most of the world's airlines, had forecast demand growth in 2020 of 4.1%, which it's now revised to a contraction of 0.6%. New details in the deal that wasn't. People familiar tell Bloomberg that back in November, Carl Icahn suggested HP buy Xerox for $45 a share, a suggestion that HP executives thought overvalued Xerox. Icahn is a major shareholder in Xerox and has previously said he fully supports the company's offer for HP. And Sprint and T-Mobile have agreed to amend their merger deal agreement to give Deutsche Telekom a higher ownership stake in the new combined company. Common shareholders will not see a change in the exchange ratio, which is 9.75 Sprint shares for one T-Mobile share. SoftBank, which owns more than 80% of Sprint, will see an exchange ratio of 11 Sprint shares for each T-Mobile share. That's according to the companies. SoftBank agreed to surrender the just under 49 million T-Mobile shares that it will gain in the merger after the deal is done. SoftBank and Deutsche Telekom will hold 24% and 43% of shares in the newly combined company. Tom, I'll send it back to you. And I'll see you very shortly.
I will see you very shortly, Rahel Solomon. Thank you very much for that. Back to the markets now. Futures off their worst levels of the morning as Wall Street looks to extend yesterday's losses. For more now, I'm joined by Matt Maley, Chief Market Strategist for Miller Tabak. And Matt, I got to say, the price action yesterday was crazy. At one point, I thought it could get a lot worse, but the buyers stepped in. What's going on right now? Why are the markets behaving the way that they are?
Yeah, there's no question that was we had a severe drop just before lunchtime yesterday. Nobody seems to really know why, because there was no specific news that came out. It seemed like almost like there was a program of some sort, the sell program, that hit the markets, but things bounced back. And I'll be honest with you, that's one of the concerns I have, is that, we've had these wild swings in both directions. Of course, some of these moves in Tesla and Virgin Galactic, et cetera, seen these wild moves. Even a stock like NVIDIA, it's only moved 33%. But a 33% rally since the beginning of the month is a very big rally. So these sharp declines, we will probably see more of those. I just think that people are getting a little too complacent. They think they'll buy the dip. Well, dips used to be 5% or 7% dips in the market, or even 3 to 4. Now it seems like if it's just 2 to 3%, that's enough for a dip. That's just a little too complacent for me, given what's going on in the world with the coronavirus. And even before the coronavirus hit, kind of stretched valuations and things that we were seeing on a fundamental basis that I'm not sure really justify the high level in the market right now.
So Matt, then I've heard the word complacency tossed around quite a bit, and there's no doubt stocks continue to hover near record highs. They are in statistically overbought scenarios and in many measures right now still. But what's driving the complacency? Why do traders feel as though the path of least resistance remains to the upside?
Well, I think a lot of it has to do with this, this faith in the Federal Reserve has got the markets back. And it's kind of this win-win situation that people are talking about and saying, well, if the coronavirus shouldn't be a problem, and if it has a problem the first quarter, it'll be made up after the first quarter. So that's a win situation. But it's also a win because if it becomes a bigger problem, the Fed will step in. The problem is that history shows the Fed doesn't step in right away when the market just goes down a little bit. They wait for the situation to get at least a little bit worse. And in this case, they have to, because if they can't spend all their bullets right away, if it turns out to be a non-event, if they step in too early, they're going to create a bubble, and they don't want to do that. And we saw that in their most recent meeting, minutes of their most recent meeting recently that came out this week, showing that maybe they're concerned about risk asset prices being elevated here and the impact that might have. So my feeling is that if the Fed does step in, if the coronavirus becomes a bigger problem, it's going to be at a stock market that's 10% or more lower from current levels. So people, I think, need to raise a little cash here and be prepared for kind of a fallout or a surprising decline that we haven't seen in quite a while.
What exactly will be the ultimate coronavirus trajectory here for markets? I ask only because people have pointed to precedent in the past about disease outbreaks and how quickly the markets bounce back. Why is coronavirus different or maybe not different this time around?
Well, I think, number one, we can't know for sure how serious it's going to be. It looks certainly more serious than the last two that we've seen, whether it be the SARS virus of 2003 or the H1N1 of 2009. The thing is that makes it different for me. In both of those cases, yes, the market bounced back very nicely, but in both cases, the stock market was down more than 50% when those viruses came out. So the market was poised, and the market and the economy were poised to bounce back strongly. Now, we're not down 50%. We're up 80%, and the economy's kind of topping out, but it's mature. So the thought that we'll get this huge bounce once this thing passes, I think is a little wishful thinking, in my opinion.
All right, Matt Maley, always great to get your thoughts. Thank you very much. Have a nice weekend.
Thank you, Tom.
All right, when we come back on the show, new reports Wells Fargo is nearing a deal with federal regulators over its massive sales scandal. Plus, no sunshine for First Solar shareholders this morning as that stock looks like it's going to open sharply lower. You can see they're down 16% in the extended trade. And then later on, Amazon fighting its own battle with the coronavirus and products claiming that they can cure the ailment. We are live in Beijing with the latest there. A very busy hour still ahead when Worldwide Exchange returns on this Friday.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under the Your New Episode section. Happy listening.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Alfa Romeo Giulia for $339 a month.
I am totally blind. And Non-24 can make me show up too early or too late or make me feel like I'm not really there. Talk to your doctor and call 844-234-2424.
Every year, our analysts visit thousands of companies in a multitude of countries where we get to know the people that drive a company's growth and gain new perspectives. That's why we go beyond the numbers. T. Rowe Price. Invest with confidence.
Next on Squawk Box, insight from St. Louis Fed President James Bullard on the U.S. economy, outlook on global trade, and impact of the coronavirus outbreak. Today on Squawk Box. Watch or listen live on the CNBC app.
Wondering which credit card is right for you? Introducing CNBC Select, the authority on all things credit cards. We do the research, you reap the rewards. Head on over to cnbc.com/select and take control of your money.
We are the dreamers. We come in a variety of colors
and styles,
a variety of sizes.
We come in different patterns
and different materials.
We are the dreamers.
Achieving your dream can take work.
I just wanted to do a career.
But don't give up.
Changing my life.
Don't ever give up.
Ignore the haters.
They didn't believe that I can do it, and I just proved them that I can.
Independence University.
IU is an online college.
Education online for a better life offline.
So your campus is wherever you want it to be.
Take classes when you want to take classes.
At IU, you receive the tools you need at no extra cost.
Even a brand new laptop and tablet to use in school.
You're going to keep that laptop and tablet when you graduate.
And IU's Career Services work really hard to help you get a job.
You've got to have dreams. Independence University.
Education online for a better life offline.
1-800-967-1179. 1-800-967-1179.
Welcome back to Worldwide Exchange. A developing story this morning. Wells Fargo may soon be able to close the books on one of the last major clouds hanging over that big bank. Rahel Solomon joins us now with that story. Wells Fargo, big deal here.
And it's been a few years coming for this company. So Wells Fargo reportedly close to a settlement with the Justice Department and the SEC over previously disclosed probes into its sales practices. The New York Times says that the agreements could be announced as soon as today. Wells Fargo has declined comment. The company had set aside $3.9 billion in the second quarter last year to deal with a, quote, variety of matters. Wells has paid out more than $4 billion in fines and penalties since it was revealed in 2016 that employees opened millions of bank accounts without customers' knowledge in order to hit lofty sales targets. It also charged unnecessary fees for auto and home loans and admitted to selling some customers insurance products that they didn't want. Last month, Wells Fargo's regulator banned former CEO John Stump from the banking industry. He and 7 other former top executives were all hit with more than $58 million in civil penalties for their roles in the sales scandal. Others, however, including Carrie Tolstead, Wells Fargo's former head of retail banking, fighting the case. In October, the company hired former Visa CEO Charles Scharf as its new CEO. He has called the bank's former sales practices inexcusable. You can see that stock down fractionally this morning in pre-market. But I think everyone would agree that the sales practices were inexcusable.
They were inexcusable, but I mean, the whole idea here is you're trying to get some clarity about the future. If they can put all this stuff behind them, then all of a sudden it maybe clears a path for investors to feel like maybe these guys can get back on track.
And finally, right.
Finally, after years.
It's been years of really terrible headlines for that company.
All right, Rahel Solomon, thank you very much. Wells Fargo, the latest there. Still on deck for the show, a menu shakeup at the McDonald's.
I want some McNuggets.
We'll get to you, Brent.
I want a hamburger. No, a cheeseburger. I want a hot dog. I want a milkshake.
You'll get nothing and like it.
You remember that line from Caddyshack, right? What the Golden Arches could be bringing to you in a drive-thru sometime soon. Plus, why Dropbox shares are popping to a level not seen since its IPO. That's Wells Fargo, but still, you can believe us on whatever's happening there. Worldwide Exchange is back right after this.
Today's big number, $29.3 billion. That's what the coronavirus outbreak will cost airlines in lost revenue this year. That represents a 4.7% drop in global demand, according to the International Air Transport Association.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under the Your New Episode section. Happy listening.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
The amount of student loan debt I have, I'm embarrassed to even say.
I felt like I was going to spend my whole adult life paying this off.
Thanks to SoFi, I can see the light at the end of the tunnel.
As of 12 p.m. today, I am debt-free.
We have no debt, we don't owe anybody anything, and it's fantastic.
No one likes to feel stuck, boxed in, or held back, especially by something like your cloud. It's a problem, but the IBM Cloud is different. It's the most open and secure public cloud for business. It can manage all your apps and data anywhere, so it can help take on anything, from rebooking flights on the fly to restocking shelves on demand, without getting in your way.
Your skin has different needs at night. That's why there's Gold Bond Overnight Lotion. Works while you sleep, penetrating 10 layers deep as hyaluronic acid locks in moisture. Wake up to rejuvenated looking skin. Gold Bond Over.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under the Your New Episode section. Happy listening.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Today, after fourth quarter earnings miss forecast, the maker of LEDs and other products says it expects sales growth in 2020, but warns uncertainty surrounding the coronavirus could have a material impact on orders. Those shares off 5% pre-market. And then we've got shares of First Solar reporting a surprise fourth quarter loss. This as revenues missed targets. The company guiding sales this year below analyst estimates as well. The solar panel maker also says it's reviewing options for its U.S. project development business. Those shares, by the way, down 16% in the extended trade. Well, still to come on the show, a closer look at the crude crush, the companies most sensitive to oil sector shocks, and whether 2020
We
can't calculate our total taxes?
Sales tax, real estate credits, solar incentive.
And we have no way to integrate all that.
No, but BDO does.
People who know BDO.
I was going to shut down my family bookstore, but the Indian rhinoceros saved it. In my travels through Kaziranga, I heard the story of the rhino.
50 years ago, there were only 400 rhinos. But now, there are more than 2,400.
India showed me what can happen if you don't give up. And if the Indian rhino can make a comeback, so can my bookstore.
Incredible India.
It's a familiar story. Allergies ruining your sleep and next day too. Taking Zysol at night relieves allergies while you sleep, so you wake refreshed. Plus, it works faster than Claritin, and on first dose provides the same relief as Zyrtec at nearly half the size. Be wise all. Take Zysol at night.
Read yourself past the junk, past the hashtags and the troll armies, the partisan pandering, past all the social media that's making your head feel like, past the gossip mags and millions of stories uploaded each day. Read yourself past the algorithms, because no one ever did anything big by reading small. Read yourself better.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under the Your New Episode section. Happy listening.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Changed the world.
Because we don't give up.
IU can help you live your dream.
IU is an online college, so your campus is wherever you want it to be.
Take classes when you want to take classes.
You receive the tools you need at no extra cost.
Even a brand new laptop and tablet to use in school.
Call IU, then tell them your dream.
1-800-967-1179. 1-800-967-1179.
Welcome back on the show. Let's get a check on this morning's other top headlines. NBC's Philip Mena is live in the New York newsroom with the latest. Good Friday morning to you, Philip.
Good Friday morning to you, Dom. We have a new insight this morning into the ousting of the acting director of national intelligence. NBC News has confirmed that President Trump forced out Joseph Maguire because he was angry that the intel chief briefed lawmakers about Russia's plan to interfere in the 2020 election to help Mr. Trump. The Russians reportedly plan to sow discord in the Democratic primary and cast doubt on close elections. Citing people familiar with the situation, the New York Times reported that the president berated Maguire in the Oval Office the day after that briefing to the House Intel Committee. Earlier this week, Mr. Trump installed his close ally and current U.S. ambassador to Germany, Richard Grenell, to acting DNI. Critics have raised concerns about his lack of experience in the intelligence field. All right, so how much would you pay for some Oreos? Well, one day after the popular streetwear and sneaker company Supreme released the Supreme Oreo, which is just a red Oreo with the company's brand on it, packages of these cookies are already popping up on eBay, and they are going for thousands of dollars. One listing on the auction site shows that the current bidding price for one pack of 3 rare Supreme Oreos is going for more than $15,000. Another pack is going for $4,000. The retail price for these cookies are only $8. And Dom, I say only $8, relatively speaking, because $8 for 3 Oreos is still a little crazy to me.
Wait, it's only 3 Oreos? That's the pack?
3.
3 red Oreos, and they're going for $15,000 on eBay.
That's the silly hype, you know.
Right.
That's the way it goes, I guess.
I probably can't use the calories anyway. But anyway, Philip Mena, thank you very much for that. Have a great weekend, sir.
All right, you too.
All right, straight ahead on the show, stock futures looking to extend yesterday's losses as a key industry group issues a new warning over the effects of the coronavirus outbreak. Plus, why the wait is over for Baby Yoda fans everywhere looking to take home their own Force-wielding Jedi. That's trending, and it's coming up when Worldwide Exchange returns after this.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just
competition coursing through our veins.
consuming us with a need to thrive. It's just part of who we are.
Pain can weigh you down, but you're resilient. And I see how lidocaine patch fuels your resilience. Powerful, targeted pain relief. Pain will not get the best of you. It will bring out the best in you. I see how lidocaine patch.
Meeting people is my life. I had to be careful how wide I would open my mouth because I was embarrassed to show my teeth. It was time to do something for myself that was going to be permanent.
The Clear Choice one-day approach is making dental implants a reality for people all over the country who suffer from missing or failing teeth.
I felt like I was the most important person on earth to them.
Bill came in, bad teeth, discomfort, pain. We needed to get him into a smile that he felt confident in. We have expertise that you might not find anywhere else, all in one location.
The next day, I had a new smile. Couldn't wait to show some folks. It's amazing what a smile can do for a person.
Discover why this is so much more than another dental procedure. It's a true life changer. With over 30,000 new smiles and counting, we're lifting spirits and confidence all over America. Schedule your free consultation today. We'll even talk about financing options.
I'm eating corn on the cob. I had the best smile I'd ever had in my life.
Call Clear Choice today.
What if you invested $5 a day, every day, and you invested the spare change from everything you buy? And what if your market returns were reinvested automatically? And imagine if you did this for a while so your money could grow. And what if all of this was easy?
Do you have concerns about mild memory loss related to aging? Prevagen is the #1 pharmacist-recommended memory support brand. You can find it in the vitamin aisle in stores everywhere. Prevagen, healthier brain, better life.
At today's Best Western, stay 2 nights and get a free night for your next stay. 1 night, 2 nights, free night. Book now at bestwestern.com.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what...
Markets facing more potential losses this morning. The big drivers of that move, that's straight ahead. Coronavirus fears on the rise amid reports of new cases of that virus across Asia. We are live in Beijing with the latest on that growing impact of that outbreak threat. And speaking of impact, oil prices once again on the decline over virus fears as that sector's dismal run rolls on. The second half of Worldwide Exchange starts. Brian Sullivan, here's how stock futures are looking halfway through the 5 a.m. Eastern time hour. You can see here we are poised for losses. Again, adding on to yesterday's losses, although those losses yesterday off the lows. 125-point decline, that's what's implied right now for the Dow. The S&P would open up by about down 16 points, and then 55-point declines for the NASDAQ if these futures moves hold into regular cash equities trading. Now, this is after a wild ride yesterday that had the Dow down more than 350 points at the lows before ending down just 128 for the Dow. If you can see there with that time lapse, like a lot of volatility there, especially right around 11 to 12 a.m. Eastern time yesterday. Now, taking a look at the bond market overall, we are seeing moves lower in yields, people buying up the safety of U.S. government debt. 10-year benchmark note yields currently 1.486%, 2-year note yields 1.375%. So again, moves in the yields lower across the curve. Now, let's check on the Asian markets. If you take a look at the picture in Asia, it was generally, we'll call it mixed here. It was about a 0.5% decline for the Nikkei. The Hang Seng in Hong Kong was down 1%, but 1/3% gain for the Shanghai Composite in mainland China. So some of the key markets there in mixed territory. Let's also see what's happening with the early trade in Europe. We're going to spin that globe around to the European continent. It's more negative there, albeit not by that much. You can see the German DAX just about flat on the day. The FTSE 100 off 0.25%. 0.2% and 0.2% declines for the CAC in France. Remember, we got a lot of economic data across the continent there this morning. And let's get a look at the price of gold, hovering near its highest level in 7 years, and it's set to post its best week in more than a month. Demand the safe haven for that safe haven asset has been there for the coronavirus fears. You can see they're up 1%, 1636.70 the last trade for COMEX gold futures. Now let's get a look at some of the other top stories that we are following today. Sears has struck a deal for a fresh financial lifeline. According to Reuters, the struggling department store operator will get $100 million from hedge fund Brigade Capital Management. Reuters says the money will be used to try to stabilize the company following bankruptcy proceedings. Sears owner Eddie Lampert rescued the retailer from liquidation in a more than $5 billion takeover just last year, so Sears again in focus. Huawei says the United States push to create a rival to the company's 5G network, quote, would be a challenge. An executive tells CNBC 5G standards have taken 10 years to create and implement, and creating a rival quickly would be difficult. The comments come amid growing calls by U.S. lawmakers to find alternatives for this country's next generation mobile networks. So Huawei, again, very key. And Facebook and Sony have announced they're pulling out of the Game Developers Conference over the ongoing coronavirus outbreak. That event is set to take place in San Francisco next month. Facebook also says it won't send any employees to the PAX East Game Convention in Boston next week as well. So the growing fears on travel for coronavirus still ongoing. Now let's talk about the outbreak itself. New figures reveal global air travel demand is set to face its first decline in more than a decade due to the virus concerns. According to the International Air Transport Association, the virus's impact on demand will cost airlines globally more than $29 billion, mostly in the Asia-Pacific region. The trade group, which represents most of the world's airlines, had forecast demand growth of just over 4% this year, but now says it expects a contraction of just over 0.5%. Meanwhile, South Korea's currency has suffered its biggest weekly loss in 4.5 years at this stage. The country has become one of the worst affected places outside mainland China, reporting 52 new cases and more than 150 cases nationwide. Meanwhile, China is reporting more than 500 new cases of the virus stemming from 4 prisons on the mainland. 2 of the facilities are located in the Hubei province, the center of the outbreak. CNBC's Eunice Yoon joins us now live from Beijing with the latest on those numbers and the situation there. Eunice, what can you tell us?
Well, Dom, I'm coming to you from a normally bustling entertainment district here in Beijing, and there are people out, trying to enjoy themselves, but just not in the numbers that you'd expect for a Friday night. Small and medium-sized businesses, especially in the restaurant industry, have been suffering. In fact, there was a recent poll out by Tsinghua University that said that 85% of SMEs expected that they would run out of cash in the next 3 months. And restaurants that we spoke to were some of the hardest hit.
You can't get a seat at this popular cafe in Beijing. Not these days.
Basically, we're not having customers.
Alex Molina's Mosto Group runs 14 restaurants like this one in China, and he had hoped to open even more here this year. Now, because of the coronavirus outbreak, the Colombian restaurateur is wondering if his business can survive.
Most of our locations are closed. The time keeps passing, and it's like we start thinking what to do with the salaries of the staff, rents, fees, costs that we have. It's getting complicated day by day.
Molina's restaurant is in a part of Beijing called Sanlitun, which is known for its nightlife and its popular restaurants. Usually, this place would be teeming with people, but as you could see, hardly anyone is here.
To cope, Molina is limiting his menus, reducing his opening hours, negotiating rent breaks, and considering pay cuts for some of his 200 employees. The government is trying to help small companies like Mosto by allowing them to delay pension payments for workers and pressing banks to offer cheap loans. Molina says the loans would help, but the biggest concern is how long the outbreak will last.
We're pretty worried that we need to declare the company on bankruptcy. We're trying to avoid that, but it's for sure it's in the back of our heads.
Eunice Yoon, CNBC Business News, Beijing.
and seeing large numbers of companies going bankrupt or worried about having to lay off a lot of people is a major concern, Dom, as you can imagine. For the Communist Party, one of the big priorities here is to make sure that people are employed.
Eunice, I also want to call your attention right now to a story that we're tracking. Amazon is taking some steps to combat companies promoting products that claim they can kill or treat the coronavirus. What exactly is the e-commerce giant doing, and how prevalent are these products on these online platforms?
Well, they have been contacting sellers and telling them to take down some of those listings because, as you could imagine, there are a lot of different sellers out there that have been promoting different products, which they say in some way either treats or cures coronavirus, and the company doesn't want people to go out and buy those things under such pretenses when there is no known cure or no known treatment at this stage. We're seeing something similar as well with Alibaba's Taobao, where the company, that e-commerce giant as well, had been trying to take down listings because there just have been so many different products circulating on these sites.
All right, Eunice Yoon live with the latest on the coronavirus from Beijing. Thank you very much and have a nice weekend. Be sure to tune in to CNBC's special report tonight on the coronavirus outbreak, giving you a full breakdown of all of the fast-moving developments and headlines there. It's 7 p.m. Eastern time tonight right here on CNBC. Well, oil prices are once again under pressure this morning on fears over the coronavirus. Crude right now, you can see they're off by almost 1.5% for global benchmark Brent crude, $58.42 there, $53.15 WTI U.S.-based benchmarks as well. The virus marks the latest headwind for the energy sector overall in the last several years. Rahel Solomon is here with more on the rough road for oil ahead. Rahel.
Rough it has been. So, Dom, oil prices have been on a wild ride this past decade. So WTI soared to an intraday high of about $114.43 a barrel back in May of 2011. So this was due to the Arab Spring and also a civil war in Libya and demand growth in emerging markets that drove up prices. But then fast forward to February of 2016, you can see where prices really tanked. They're there about $25.05 a barrel. That's because that growth in emerging markets began slowing. Rising supply also came into focus. And that oversupply of oil still a focal point today. Take a look. In 2010, U.S. crude production hovered above $5 million a barrel. It has more than doubled in 10 years. And it's not even just the last 10 years where we have seen this volatility. Check out crude prices. In just the last month, they have gone as high as $58.44 and as low as about $49. So one company that's been particularly vulnerable to the swings in oil prices is Marathon Oil. So as you look at its performance over the last 10 years, you can see it's essentially traded in lockstep with WTI crude. Others, however, like Chevron, they've proved more resistant to those swings. Starting mid-decade, they've also held on to that relative outperformance since then. So one of the factors impacting oil prices lately, at least, much like the broader market, Dom, as you just mentioned, coronavirus headlines. When it looks like there could be a slowdown in reported cases, we start to see prices jump. But then when demand concerns return, prices dip. So, Dom, as we continue to monitor the spread of the virus, and as uncertainty remains, we can expect that volatility too as well. I'll send it back to you.
All right, sectornomics and energy this time around. Rahel, thank you very much. Joining me with more on this topic, Mike Somers. He's the president and CEO of the American Petroleum Institute, the API, representing all the major segments of the oil and natural gas industry with more than 600 members. Mike, good morning to you. You just heard Rahel's report. How concerning is what's happening with oil prices and the coronavirus? Will we feel it here in the American oil and gas industry?
Thanks, Dom. I do think that it is a key concern for our industry, and we're focused on it. But we also look at the history of such viruses. So if you go back and look at the SARS virus, that was really a couple of quarters that were affected, and oil prices rebounded after the SARS epidemic receded. And we expect something similar. So, this is an industry that is resilient. It's an industry that has dealt with booms and busts over its many years. And I think that you'll see the industry rebound as the coronavirus ceases its effect on the American economy.
All right, so Mike, as Rahel mentioned, a huge contributor to the global oil oversupply is the U.S. shale revolution and fracking, hydraulic fracturing. That technology was huge in terms of putting the U.S. front and center, the swing producer for the world now, diminishing even OPEC's global hold. That did come up in this week's Democratic presidential debate as well. Take a listen.
The scientists are telling us that if we don't act incredibly boldly within the next 6-7 years, there will be irreparable damage done, not just to Nevada, not just to Vermont or Massachusetts, but to the entire world. Joe said it right. This is an existential threat. You know what that means, Chuck? That means we're fighting for the future of this planet.
All right, so Mike, those are some heated words from some of the Democratic presidential candidates. Bernie Sanders, they are the independent from Vermont. What exactly is the oil and gas industry's take on how the current political situation is evolving? And how important is that U.S. fracking industry to the overall well-being of the American economy?
Well, you just saw the numbers. Really, it's only because of the American energy revolution that consumer prices have continued to remain low for energy. So we're focused on making sure that this technology stays online because it is helping consumers. But, Senator Sanders also forgets an important component of this. It's also helped our environment. Because of the fracking energy revolution in the United States in the last 10 years, prices have gone down, but also our environment has improved. In fact, we're at 25-year lows in terms of the emissions that are being produced in the United States. In fact, we lead the world in emissions reduction, and that is mainly because of the switch from coal as the lead energy production unit to natural gas, which is significantly cleaner. In fact, we calculate that about 60% of the environmental improvement in the reduction in emissions is because of natural gas, not because of renewables. So if I told you about a technology that would actually help the environment, that would help American consumers, would reduce our trade deficit, and increase American jobs, I think most politicians would jump on that, not try to ban it. So we're really focused on making sure that this technology stays online. We have a study coming out next week, in fact, Dom, that's going to show that about 7.5 million American jobs would be lost if some of these proposals were put into place. So we're keenly focused on this technology and making sure that American producers can continue to produce for the world market.
All right, Mike, in a former life, you were in the political arena. In this life, you're in the business one. It's a cross-section. We know that energy, business, politics is never just black and white, but you see what's happening with the Democratic presidential primaries coming up. You see what's happening with President Trump. What is the industry, the oil and gas business in America, doing in terms of handicapping the outcomes, and how exactly are you preparing for what could be different outcomes in this election cycle?
Well, we will obviously play a key role in the election going forward. But, key states that folks want to win if they're going to be president of the United States have huge amounts of energy jobs in them. Pennsylvania is just one example, 400,000 jobs in the state of Pennsylvania committed to this industry. And we want to focus on those folks. These are great paying jobs in the energy belt. And we think that most politicians will wake up and realize that if they want to actually be president of the United States, they have to be focused on these great paying jobs in the energy sector. So we'll play a role. We work with Congress. We work with regulators. We'll be working with all of the presidential campaigns to make sure that they understand how important this industry is. But of course, we are very concerned about the policy implications of what some of the candidates are talking about. One of the other things they're talking about is actually taking the oil export ban back to the 1970s and saying that American producers can no longer export crude. That would be a terrible thing from an environmental perspective as well. Because what you're basically doing is you're taking production that would have happened in the United States. It's going to happen somewhere else. The world will meet this demand. Then the world demands about 100 million barrels a day. That is going to continue, whether it's done in the United States, which is the most environmentally conscious producer, or it's going to be done in other places.
All right, Mike Somers from the American Petroleum Institute with the industry's take on what's happening with production in the elections. Thank you very much. Always great to get your thoughts.
Dom, great to be with you.
All right, thanks. Coming up on the show, McDonald's looking to help set the mood in your home with a cheeseburger candle. Details on the stories you'll be talking about when Worldwide Exchange returns with those trending stories.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under the Your New Episode section. Happy listening.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Objectives. Sector Spiders. Write your next chapter in investing. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to sectorspiders.com for a prospectus containing this information. Read it carefully.
When your skin is feeling dry and crinkly, time for Gold Bond Healing Lotion. Penetrates 10 surface layers deep with 7 moisturizers, 3 vitamins. Skin is nourished, healed, healthy looking. Gold Bond Healing. Ultimate lotion, ultimate skin.
Whether you've enjoyed the legendary terrain in Telluride, the unparalleled landscape of Park City, or the famed peaks of Whistler, you face the hassle of lugging your gear through the airport. With ShipSkis, you're just a few clicks away from having your skis, snowboard, and luggage shipped from your doorstep to your destination. With unrivaled pricing, real-time tracking, ShipSkis delivers hassle-free. Ship ahead and go catch those first tracks on fresh snow. ShipSkis, your skis delivered.
Day 1, 50 Peloton rides to start the year. Here we go. Halfway there, just hit a 5-day streak.
We did not wake up to be mediocre today, Peloton.
It's just another meeting.
Come on, you didn't wake up to be mediocre.
These are our sales, by product, by region. You can actually see taste trends.
Since when can we do that?
Since we started working with BDO.
People who know BDO.
I love the new My WW program because it's tailored to you. Take the personal assessment and get matched with a proven weight loss plan. Find out which customized plan can make losing weight easier for you.
My WW. Join today with the WW Triple Play.
Welcome back. Let's check out some of the other stocks on the move so far today. Texas Roadhouse reporting better than expected fourth quarter results as same-store sales rose more than 4%. The steakhouse chain is also hiking its dividend by 20%, those shares up 7% pre-market. Shares of Sprouts Farmers Market are higher after the fourth quarter earnings there beat forecasts. The grocery store chain says selective promotions are helping to drive higher margins. Those shares up 8.5% pre-market. And Fastly reporting a smaller adjusted fourth quarter loss as sales rose 44%, but shares of the cloud computing company are dropping today after it says its CEO is stepping down to become the firm's chief architect and executive chairman. Fastly went public less than a year ago. Those shares off 3.5%. Let's find out what else you will be talking about today. Time for this morning's top trending stories, and Rahel Solomon is here with those. Good morning, Rahel.
Hi, Dom. So this next story has been making the rounds on the internet, and rightfully so. So apparently the only thing better than the taste of a quarter pounder is the smell of one. That's at least according to McDonald's, certainly not my words. The fast food giant is celebrating the 50th anniversary of its classic burger by releasing some unique fan club swag. So among the options, a scented candle pack, and each candle carries the scent of one of the burger's 6 ingredients, including fresh beef, onions, yum, pickles, and the bun. The retailer recommends burning them all together for maximum deliciousness. But Dom, it's like I always say, nothing quite sets the mood like the smell of onions.
Are you a candles person?
Yes, but none of those candles.
Come on. So what exactly, what candles would you put in your home then?
You know, I'm more of like a lavender person.
The calming effect of
fresh
lavender.
beef doesn't quite make me relax.
A quarter pounder definitely settles me down sometimes.
Oh, really?
Oh, yes,
okay, I know what I'm getting you for Christmas. Also, maybe this, because this is perhaps some cool swag, Baby Yoda fans. Finally getting their long-awaited merch. The line includes items like a talking plush doll, a mini Bluetooth speaker, a Mandalorian version of the classic Operation board game. Remember that?
Yes.
Love that game. And also a baby beanie. Some of those items are available for pre-order today, and the bulk of the collection will be on display at this New York Toy Fair this weekend.
I want to know whether or not I wouldn't say that they missed the boat, because obviously there's a very dedicated core group of Mandalorian and Baby Yoda fans out there. But you wonder if all of this stuff was there back when the series first aired on Disney Plus, whether you could have really, the iron was hot then.
Right,
Is it still hot now?
I don't know. I guess we'll see.
I guess we'll find out.
We'll see if the iron is hot with those candles, too.
I know, seriously, right? Thank you very much,
Sure.
Rael Solomon. Well, still on deck for the show, futures pointing to a negative end to the trading week. Oppenheimer's John Stolfus and Crossmark Global's Victoria Fernandez are breaking down all the action and how to navigate all the market turbulence. And a reminder, you can always watch or listen to us live on the go on the CNBC app. Worldwide Exchange is back after this.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under the Your New Episode section. Happy listening.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Going to the dentist? Well, relax. The Carefree Dental Card is now available in your area. Call the number on your screen and we'll send your actual card at no cost today. With the Carefree Dental Card, you go to the dentist whenever you need and you instantly pay a lot less. The Carefree Dental Card is just $15.95 a month. So call now and make going to the dentist carefree.
Call 1-800-478-0809 to receive your free Carefree Dental Card information kit.
Life Room by Four Seasons, where outdoor living meets future technology. No matter your style or budget, Four Seasons has got you covered. Simple shade from the sun? Covered. Outdoor dining in style? Covered. Need additional living space? Oh yeah, that too. Call today and arrange your free design consultation. Four Seasons, we've got you covered.
Virus fears, market volatility, and the impact on your money. Time to buy or hold. Strategies ahead of the first trade on Squawk on the Street, 9 a.m. Eastern today. Watch or listen live on the CNBC app.
Zoe's Extraordinary Playlist, Sunday on NBC, and streaming the next day.
From Brooklyn, New York, the most influential voices disrupting the next decade of work. April 1st and 2nd, CNBC's At Work Summit presents insight from top business leaders, helping you empower the modern workforce, boosting productivity and the bottom line. To register now, go to cnbcevents.com/.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under the Your New Episode section. Happy listening.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Bayless. Follow @TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Bell expected to be down from a year ago as a result of President Trump's international trade disputes. Last month, Deere CFO Ryan Campbell said the company expected agricultural retail sales to be down 5% in the U.S. and Canada in the year 2020. Well, U.S. markets could be headed for another down day today as investors continue to monitor headlines on a number of new fronts with regard to the coronavirus and new cases. Stocks coming off a negative session yesterday, driven by a sudden midday sell-off on little to no news at all before recovering a bit to close off the lows of the day. Joining me now is John Stolfus, Chief Investment Strategist at Oppenheimer, also Victoria Fernandez, Chief Market Strategist at Crossmark Global Investments. As I always do, ladies first, Victoria, what exactly is happening with this market and should investors be scared?
Well, Dom, I mean, obviously the coronavirus issues that we're seeing are driving the moves in the market. We thought we were making some progress there. China was reporting that we were getting lower new cases every day, and that really made the market feel better. We saw it turn around and really move higher last week and the beginning of this week. But now that we're seeing new cases develop, we're seeing new cases in Singapore, new cases in Korea, and new deaths occurring outside of the mainland of China, then people are starting to get concerned again. And the question really comes down to how much disruption are we going to have? Some of these smaller private companies in China, our research is showing they only have about 2-3 weeks worth of cash flow left. to really make it their way through this tragedy. So they're going to have to see things turn around pretty quickly. Some of the more state-sponsored entities have a little bit longer, maybe 2-3 months that they can go. But we're starting to get to that point where those supply chains are going to have massive disruptions. We're seeing it in retail companies, transportation companies. They're reporting it in their earnings calls. That's what's driving the market right now.
All right, so Victoria brings up some interesting points here, John, with regard to that. She also kind of hinted at this idea that we've seen some of these things in the past. There's been a historical precedent. The coronavirus, though, in your mind, is it fair or even appropriate to use some of those historical precedents for what's happening with this particular outbreak?
We'd have to think so, Dominic. When we look at it, I can recall traveling to China in the first quarter of 2004 after SARS had peaked. And we put this all in context, and we think China is better prepared to deal with it now. As a result of, on the ground, you have many global multinational healthcare companies that can help out with this situation. We think the main effort needs to be boosted by transparency, an effort to get greater confidence in terms of the data. And of course, the disconcerting thing is that, you've got this pickup of cases in Korea, Japan, and Singapore, the results of which tell you that this isn't going to be as short-term as many people expected. That said, these viruses tend to peak in a relatively short period of time. We think it's kind of late to get defensive here, with the defensive sectors, particularly in equities, richly valued.
Now, Victoria, was yesterday's price action the midday slide where we watched the Dow in essence fall by 200 to 300 points in the matter of a few minutes? Was that a wake-up call? Is the market positioned in some way right now where we could see more of that kind of intraday volatility? And does it mean, or will it be a precursor to more extended slides later on down the line?
Dom, I wouldn't be surprised if we see more slides coming like we did yesterday. Obviously, when you have new news that comes out that's talking about new countries where we're seeing some of these cases start to increase, that's going to cause concern and bring that uncertainty back into the market. We know the markets don't like uncertainty. That's what drives the volatility. So I wouldn't be surprised if we continue to see some of that. But as we've spoken before, and what we tell our clients is they really need to have to strive to look through the headline noise that they're seeing, focus more on some of the longer term investments. You don't want to trade on these headlines right now because I do think they're going to turn around pretty quickly, probably in the next quarter. So look a little bit longer term, see what trends you think are coming in that format, and that's where you need to be investing.
All right, so John, it's interesting. The headline risk certainly is something that's been considered noise by a lot of folks, especially because markets sit near record highs. Yesterday aside, though, it seems kind of lately that investors, they just can't lose, right? They can buy bonds, they can buy gold, they can buy stocks, they can buy just about anything, and they all go up in value. Stocks near record highs. The dollar index is at its highest level in more than a year. Gold is at a 7-year high. I could go on and on and on. Virgin Galactic, Tesla. What's behind the so-called everything rally, and should you tread with caution here?
Well, we'd have to think that the everything rally is particularly distinguished by Tesla, for example, and other issues that are moving forward that are unrelated to what's happening with the coronavirus, but are related towards longer-term trends in technology. Some of these things look a bit frothy, but we think at the core, if you look at the S&P 500, the S&P 500 is a broadly diversified index and has many opportunities, we think, that are intermediate to longer term, still remaining attractive within technology, consumer discretionary, industrials, and financials, all of which have been dinged a bit by what's happening here. So we think you have to separate the excitement from the core.
All right, John Stolfitz, Victoria Fernandez, thank you guys very much. Have a great weekend, guys. That does it for Worldwide Exchange. Squawk Box starts right now.
Good morning. Futures in the red after yesterday's mystery sell-off on Wall Street. We'll tell you about some of the potential catalysts.
Developing story, Wells Fargo is reportedly nearing a deal with government watchdogs over its massive sales scandal.
And Virgin Galactic isn't quite returning to Earth, but a slightly lower trajectory for the stock this morning. It's Friday, February 21st, 2020. Squawk Box begins right now.
Good morning, everybody. Welcome to Squawk Box here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. We're going to start with the markets this morning after yesterday's midday sell-off that left traders searching for a catalyst. The Dow fell nearly 200 points in 2 minutes. It was down as much as 388 points before rebounding to try and close lower by about 128 points. That's a decline of just over 0.4%. But take a look at the U.S. equity futures this hour. You're going to see that the S&P, the NASDAQ, and the Dow are all indicated lower this morning. Dow indicated down by about 132 points. The NASDAQ was the big loser yesterday. It was down by over 0.6%. This morning, it's indicated down another 53 points. In fact, if we continue at this pace, you're going to be looking at a negative week for the NASDAQ, and that's the first time you will have seen stocks down for the major averages in 3 weeks. Also, the S&P this morning indicated down by about 16 points, but just keeping things in perspective, we are still very near all-time highs for both the S&P 500 and the NASDAQ. Let's take a look at what's been happening in the Treasury market. You'll see right now, below 150, did you say? Wow. 10-year yielding at 1.486%, so that is some additional pressure. A lot of concerns about what's happening with global growth, what it's going to mean for the economy. I know S&P was out saying that for the year, you could see Chinese growth at 4.4% for the full year, and that's a concern. I think that's a scenario if they actually see a peak to the coronavirus in March.
All these new highs, and Goldman talking about a potential correction. It's always easy to talk about a potential correction, and I mean, I can certainly see how the case could be made right now. If uncertainty is what stops the momentum in a stock market, is there anything more uncertain than the possibility of a global pandemic? And I think about it a lot, and it's just hard to even buy any stock that wouldn't be impacted by a bad outcome
to this point, the reason that you continue to see these highs is that people assume it's going to be a V-shaped recovery and it's going to happen sooner rather than later. That you will see
coronavirus,
a return to the economic with coronavirus going away, and a return to the economic.
Well, we don't know if it goes away, and we still don't know what kind of numbers we're getting. It appears that it's slowing. Then we hear that they changed the way that they're counting.
Well, then you see in South Korea where it's spreading pretty rapidly. There was a major increase overnight.
It's just hard if you rank uncertainties. For me, 1918 global pandemic, imminent, millions of deaths. That's a really scary. That's one of the scariest things you can.
You were scared back then?
Yeah. I didn't get the flu shot then either. I just think that it's. If you rank uncertainties, it's a big one, and I can see how the market could certainly take
There's a story in the business section of the New York Times today talking about how Amazon is really looking at some long-term issues and already showing some concern about what it will mean for Prime Day in July, when it usually takes place, because they're worried about being able to ramp up. They rely so heavily on getting things from China, and with factory shutdowns and slowdowns, what's that going to mean? And when you start thinking out, okay, months and months from now, what the impact will be.
And when we have Dr. Scott Gottlieb on, he has consistently said, no, there will be pockets here in the United States. We had Dr. Sierra, what was her name, Madad, on there will be pockets here. If this if there are more cases that finally come to the United States, then it will really, I think, a lot of stock trading are Wall Street guys around here. It's way over there still at this point.
You see Apple and another company, I forget the other company, maybe it's Sony, said that they are not sending people to a conference in San Francisco that's coming up. They're also not sending people to a conference in Boston. So there are concerns. That just shows you at the corporate level there are concerns about travel even here in the United States.
If it does if there are possible pockets here in the United States, what do you think that the stock market would do in that case? I think that might
inevitably react.
But is that 5%? Is that
I don't know.
10%?
Goldman said something yesterday, 5 to 10 or something.
Right.
I think.
But I'm asking you.
I don't know. I'm just saying that if you rank my fears, that a global pandemic is up there. So until we get a really good handle on it, I just can't see how you'd be long. How you'd want to really be long anything.
This goes back to who. said this on our air in Davos, Switzerland. Literally,
he's a
gazillionaire
gazillionaire from commodities, so he's got to have a pretty good record.
Macro trading record.
Yeah.
Also, on this note, global air travel demand is set to decline for the first time since 2009 because of the coronavirus outbreak. According to the International Air Transport Association, the virus's impact on demand will cost airlines globally more than $29 billion, mostly in the Asia-Pacific region. The group estimates that Chinese airlines will lose some $12.8 billion in revenue because of the outbreak. And there was a note out from Stephen Schork earlier today talking about how jet fuel demand has really pushed down prices for jet fuel as well. In the meantime, South Korea's currency has suffered its biggest weekly loss in 4.5 years. The country has become one of the worst affected places outside of mainland China, reporting 100 new cases overnight, bringing the country's total above 200. And car sales in China have plummeted 92% in the first of this month due to the ongoing coronavirus outbreak. The China Passenger Car Association says that just under 5,000 cars have been sold. That's down from nearly 60,000 cars a year ago in that same time period. China's auto market is expected to see sales slide around 5% for the full year.
Okay, let's get to Eunice and find out. We need not only the number, but we need her to tell us exactly what it means. Overnight, China reported more than 500 new cases of the virus, now stemming from 4 prisons on the mainland, 2 of which are located in Hubei, the center of the outbreak. Eunice Yoon joins us now with more on the impact of the virus. So 500, Eunice. And it's a new method that we're counting. Is that more? Is that less? Is that is it slowing? Is it picking up? Which is it?
Well, I have bad news for you, Joe. We don't know, because the latest on the count is that the local authorities in Wuhan had decided that the numbers that had been discounted before needed to be re-added into the count. So more confusion instead of less when it comes to the methodology of counting. But I wanted to tell you more about the impact of the coronavirus crisis, because I managed today to speak to a restaurant, which is just one of many, many small and medium-sized enterprises here that are suffering because of the virus. In fact, a recent poll found that 85% of SMEs were worried that they could run out of cash in the next 3 months. And the Chinese government has identified F&B as one of the hardest hit sectors.
Usually, you can't get a seat at this popular cafe in Beijing. Not these days.
Basically, we're not having customers.
Alex Molina's Mosto Group runs 14 restaurants like this one in China, and he had hoped to open even more here this year. Now, because of the coronavirus outbreak, the Colombian restaurateur is wondering if his business can survive.
Most of our locations are closed. The time keeps passing, and it's like we start thinking what to do with the salaries of the staff, rents, fees, costs that we have. It's getting complicated day by day.
Molina's restaurant is in a part of Beijing called Sanlitun, which is known for its nightlife and its popular restaurants. Usually, this place would be teeming with people, but as you can see, hardly anyone is here.
To cope, Molina is limiting his menus, reducing his opening hours, negotiating rent breaks, and considering pay cuts for some of his 200 employees. The government is trying to help small companies like Mosto by allowing them to delay pension payments for workers and pressing banks to offer cheap loans. Molina says the loans would help, but the biggest concern is how long the outbreak will last.
We're pretty worried that we need to declare the company on bankruptcy. We're trying to avoid that, but it's for sure it's in the back of our heads.
And the Chinese government has been trying to stabilize business for a lot of small and medium-sized companies, mainly because the small and medium-sized enterprises here employ millions and millions of people, and they don't want to see those people losing their jobs or losing more pay. Guys?
Hey, Eunice, it sounds like it's getting more and more complicated for you in Beijing yesterday. I saw some of your tweets last night just talking about what you have to do to get in and out of your apartment building right now. How has that changed? How difficult is it?
It's actually gotten much more difficult, and I think part of that is because we had some disturbing news here in Beijing in the morning where there were clusters at 2 hospitals, mini outbreaks in the Chinese capital. So that had heightened fears here that things could get worse. So the Chinese state press had actually referenced it and said that the district that saw those the uptick in cases had an infection density, they said, that was just lower than the epicenter of Wuhan. And again, that was evoked, I think, a stronger response out of the authorities here to try to make sure that they really contained the spread. And what you're referencing is that to get into my residential compound, I was told yesterday that I now need to bring my housing rental lease as well as my passport to the authorities, to the community authorities, in order to get a pass, so that each apartment is now allocated 3 passes. And if you have a family of 4, then one of the people is out of luck and is going to just have to stay at home the entire time. So we're seeing a more tightening here in Beijing.
Hey, Eunice, you've done a phenomenal job of bringing us coverage, helping us stay informed of what's happening, what it feels like on the street there. How concerned are you at this point?
That's a good question. There are days when I think that it's fine, that it's going to be okay, because you do see that the authorities are really trying their best, to try to keep things clean. I now smell bleach and disinfectant all the time, but at the same time, there are these. You do hear about these mini outbreaks. And you just don't really know when you could actually catch the disease, and so it is disconcerting. But I don't know. I'm hoping that it gets better. I'm more of an optimistic person, so I'm hoping.
We're hoping too. We want to thank you for all the work that you're doing, and we're thinking about you a lot. Thank you, Eunice. All right, a reminder that on Monday, we're going to be sitting down with Warren Buffett. The Oracle of Omaha will spend 3 hours live on Squawk Box answering our questions and yours. You can tweet those questions to us with the hashtag AskWarren. This is the 13th year that we'll be sitting down with Buffett following the release of his annual letter to Berkshire Hathaway shareholders. In 2019, he shared with us who he's thinking about when he starts off writing that letter each year.
I've always had the image that I am talking to my sisters. I have 2 sisters. They're both Berkshire's, pretty much their whole investment. They're smart. They're not active in business, so they're not reading about it every day. But I pretend they've been away for a year, and I'm reporting to them on their investment. So it's Dear Doris and Bertie.
Also, make sure to sign up for CNBC's weekly Warren Buffett Watch newsletter. Alex Crippen writes that. He does a phenomenal job. You can go to buffett.cnbc.com. We'll also have a special edition of the Squawk podcast on Monday, and we'll tell you more about that a little later.
Okay, coming up when we return, we're going to talk more about yesterday's mystery midday sell-off and the move in the futures this morning. Plus, as we head to a break, take a look at shares of Virgin Galactic and Tesla.
Today's big number, $29.3 billion. That's what the coronavirus outbreak will cost airlines in lost revenue this year. That represents a 4.7% drop in global demand, according to the International Air Transport Association.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under your new episode section. Happy listening.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
The Mercedes-Benz Certified Pre-Owned Sales Event, now through March 2nd, only at your authorized Mercedes-Benz dealer.
numerous fears, market volatility, and the impact on your money. Time to buy or hold. Strategies ahead of the first trade on Squawk on the Street, 9 a.m. Eastern today. Watch or listen live on the CNBC app.
You want to know what it takes for a stock to keep advancing after earnings? Well, we're seeing stocks run up into earnings and then go higher because management's able to make a claim that the future's brighter than the past. Watch or listen live on the CNBC app.
Once upon a time, being middle class meant you could afford to live a comfortable lifestyle. But these days, it often means being up to your ears in credit card debt. If you owe $10,000 or more in credit card debt, here's something that might surprise you. There are secrets that credit card companies don't want you to know. Secrets on how to completely resolve your debt and become debt-free. Imagine the thousands you could save. To unlock these secrets, request free information from Credit Answers. Just call 1-800-339-5112. We're not talking bankruptcy or debt consolidation. This is your chance to settle your debt for a fraction of what you owe. We even offer a guarantee, so there's no risk to call. Unlock the secrets credit card companies don't want you to know. Within 5 minutes, we'll show you how our program works and how much money you could save. Credit Answers, your answer to overwhelming credit card debt. Call 1-800-339-5112. 1-800-339-5112.
All right, welcome back, everybody. Let's talk right now about where investors can find opportunities in the markets after yesterday's confusing and wild ride on Wall Street. Joining us for that is Julian Emanuel, the Chief Equity and Derivative Strategist at BTIG, and Simeon Hyman, who's the Head of Investment Strategy at ProShares. First of all, does either of you have any idea what happened yesterday? It was just a weird sell-off. Nobody could really point to it. It wasn't a massive one, but it did leave people kind of scratching their heads wondering
Look,
what
we're going to keep having it as long as we're in an uncertain period with regards to the virus.
So that's what you think it was, just uncertainty selling starts.
That's the near-term volatility.
Well, that's a little frightening.
The South Korea popped up as having more bad stuff.
Right.
You agree with that, Julian?
Well, we actually saw a little bit of program selling coming out of Europe. The DAX, which has been on an incredibly strong run in an economy where there are political issues that grew by 0.0% in the last quarter, and yet you're at all-time highs. Things started coming off there. I think we have to put this into perspective. The VIX has been trading 14, 15, 16, lower than the long-term average, and we've had a lot, a month and a half, 6 months, a year's worth of very strong gains. It's normal when you get this overbought to start to see a little bit more volatility.
I totally agree. I think it's weird that we've held in to this level, but maybe that's